All right. Good morning, everybody. Welcome back to another episode of the Market Open. It is Thursday, September 5th, 8:47 a.m. And we have a lot to talk about. Folks, we got jobs data this morning. Tomorrow is going to be the more important jobs data that we're going to get for the entire month of August in terms of the actual full-on jobs report for government, private payrolls, all that stuff combined together. And that report is probably going to determine if we get 25 or 50 bips of cuts. But this morning, we got two pieces of jobs data that we need to talk about, two pieces of jobs data that are very important to discuss. They're definitely already having an impact on the broader market. And after that, we've got a lot of other headlines to get into. We've got Nvidia and the DOJ subpoena that apparently didn't happen. If you guys missed that news last night on the market close, we saw that Nvidia at 3:58 p.m. said, hey, we were never sued by, or we were never subpoenaed by the DOJ, which I mean, like that if that's the case, Bloomberg kind of made that up, or they got the wrong source when they put out that news. So that's not good in the context of everything that was believed. If that sell-off on Nvidia of 9% was based just on that DOJ subpoena news, then maybe we get a little bit of a rebound. We've got Tesla that's up 2% right now in the pre-markets. Why is Tesla up? Because apparently FSD is expanding to Europe by Q1 2025, also for the Cybertruck. So we're going to talk about some of the implications on Tesla. And then we've got a lot of other stocks that are moving a little bit in the pre-markets based on what happened yesterday. Celsius obviously was one of the big losers yesterday, and so we'll be talking about that. I believe at 10:30 as well, we have this set up, so as long as nothing changes, we'll be good to go. Yes, I just got the confirmation text. We will have Will, who is the CEO of Granite Shares. We saw Palantir's 2x leverage ETF, PTIR, launched yesterday. Granite Shares is the company that launched NVDL, which has the 6 billion AUM ticker. That is the Nvidia 2x leverage ETF. So we're going to have Will, the CEO of that company, come on for about 15 minutes and explain a little bit more what these leverage ETFs are and how they even operate and all that good stuff. And so we'll get some more information from him in about an hour as he joins the show. All right, so the jobs report. First of all, Nvidia is recovering a little bit. Those are some green candles. We bottomed at around 104 on Nvidia. Once we got some jobs data, we got some separate jobs data after we got that jobs data. So we have two pieces of jobs data to talk about. That's why Nvidia is recovering just a little bit right here, down only 0.5% when it was down almost 2%. And we'll check that out. S&P 500 also recovering a little bit. S&P was 549.27. Now it's at 550.41. It ended yesterday at 550.95. So a little bit of a decline, but not as aggressive of a decline. And that's because I think we got some other jobs data that's important to talk about from the initial jobs data we got, which kind of balanced out the first piece of news. So this is what I mean. We got one piece of news that was good, one piece of news that was bad. Here is what we had. So August, we added 99,000 private jobs in 2024 in the month of August. The market expected 145,000. Now, this is different from the number we're going to get tomorrow. Tomorrow, it's combining a lot of other sources of job growth, not just private payrolls. This is ADP private payroll growth, which is a little bit different than the actual report that comes out on Friday. I know it's complicated, but two different numbers. So that's bad, right? And the market immediately, I think we got this number at 7:30, and the market started going down on this news. And then at 8:30, we got the initial jobless claims that came in at 227,000 versus 232,000. This number has been beating expectations for the past 3 weeks in a row, meaning less people are filing unemployment claims, which is overall good for the labor market. So all of this leads up to the essentially big report coming out tomorrow that we don't know is going to be good or bad. I have my theories on what could happen. We've talked about a variety of different scenarios in terms of how that jobs report can play out tomorrow, but it's really a toss-up at this point because we're getting a lot of conflicting pieces of data on if the economy is growing or not, if private payrolls are growing or not. And tomorrow we're going to know. August is going to give us an official jobs report, and we will find out how bad things were, how bad things weren't. And if they end up being worse than what's expected, then you're going to see the market start to price in that dirty R word, which is a recession. If they're better than expected, then maybe the market starts realizing, hey, it's not going to be as bad. And even if we get 25 or 50 bips, it's not going to be the worst thing in the world. So this is going to be a very, very important jobs report tomorrow. I'll be live at 8:20 a.m. to kind of see how it plays out. I don't really know how to make sense of the current pieces of data we just got this morning because some of it's good, some of it's bad. One thing I can make sense of that I think everyone can make sense of, the labor market's weakening. And Jay Powell said this, Bostic said this, Goolsby said this, all the Fed presidents, all our Fed goons said this. So if the labor market's weakening, then it's time for us to begin cutting rates. Let's get an update right here on the jobs, and then we'll keep going from there.
Policeman has those. Let's get right over to Steve.
Becky, thanks. Just 99,000. ADP reporting that private payrolls for the month of August rose by just 99,000. That's against an estimate of 140,000. It's the lowest level reported by ADP since 2021. Goods sector up 27,000. Not really that bad for the goods sector, but service sector not doing its part, just up 72,000. All of this is against the payroll estimate for Friday of 161,000. We'll see how confident economists and forecasters are in that forecast.
161 would be pretty good, in my opinion. Bank of America says 200,000. Some other companies or some other firms are saying 125,000. So again, today was private payrolls. Tomorrow is total non-farm payrolls. That's the difference between today and tomorrow. So hopefully, if we still add 160, the market ends up liking that tomorrow.
As the day goes by. July was revised down by 11,000 to 111,000 from 122,000. Where were the jobs and where weren't they? Well, small business did not do very well in this month, down by 9,000. You can see right there. Medium okay at 68,000. Large businesses greater than 500 employees up by 42,000. By industry, there's education, health services at the top again, but not as strong as it's been. Construction, okay, 27, but in that goods sector, it was manufacturing that took off the 8,000. Financial activities, okay, but professional business services down by 16,000. Looking at this data on wage gains, unchanged at 4.8% year over year for job stayers, 7.3% for job changers. We don't know because we don't have the series going back pre-pandemic where the right level is, but it looks like we have, at least for a couple months here, bottomed out at this, what do you call it? Relatively high, but much lower than it had been in terms of the wage gains that were out there. Becky, this adds to, I don't know, some concern out there about the economy from yesterday's Beige Book. They said consumer spending ticked down in most districts. Only 3 districts reported of the 12 districts of the Federal Reserve reported any increase in business activity. So there seems to be a gathering weakness here. How much deterioration? Well, we'll see at 8:30 with jobless claims. And again,
jobless claims are pretty good. So really tomorrow is going to determine how much the weakness is, and if that's going to be 25 or 50 bips. I am still under the impression we will get 25. I think we should get 50. I do think there's the downside effect that if we do 50, the Fed's going to, or not the Fed, the market's going to freak out that, hey, why are you doing 50? Are you being too reactionary versus having a preliminary step to being able to cut rates? I kind of think that's a stupid concern, though. It's like, we know the Fed is late. We know they need to get at least down by 100 bips. The 2-year and the 10-year uninverted yesterday. I think they might have reinverted this morning. But we know that all the economic signals are flashing that, hey, it's time to cut. We know the core PCE is the federal funds rate is more than double the core PCE, which is the Fed's preferred metric. So it's time to cut. So doing 50 to me is not crazy. But the market's narrative is going to be 50 is too aggressive and it's admitting defeat. Which is kind of funny because it's like, yeah, if we should, we should be admitting defeat and we should be hurrying up to like solve it. But, it's how the market kind of prices all that in. So that jobs number tomorrow, whether it's 100, 150 or 200 or anything in between, is going to determine 25 or 50. Citibank yesterday came out at 11 a.m. yesterday after the JOLTS report. Remember, we have 7.9 million jobs available in the United States of America. That is the lowest since January 2021. And they said, hey, it's time to cut by 50 because the labor market is obviously showing extreme signs of decline. Here's another stat on this jobs report that we got this morning. So the highest paying jobs all have declined. Call it some of the white collar jobs and some of the harder jobs that are a little bit more IT heavy. So professional business services, manufacturing, and information. So manufacturing lost 8,000 jobs, information lost 4,000, professional business services lost 16,000, financial activities did add 18,000. And then if we look at the regions on where we saw the decline, New England in the Northeast, that's where you have a lot of these consulting firms. That's probably why you saw some of the decline. And then in the West, I mean, look at the South. We added 55,000 jobs in the West, which is California, Oregon, Washington, et cetera. Vegas, we added 20,000. So the West and the East in the United States is where you have kind of these white collar tech consultant type of jobs where people just sit on a computer all day and act like they're doing stuff, even though they're not doing stuff. I'm kidding. Not really kidding, but I'm kidding. Those types of jobs, more and more companies are saying, hey, we kind of don't need those people as much anymore, right? And it kind of makes sense. Like if the economy is tightening up a little bit, the labor market's tightening up, you don't need more and more project managers. I think project managers are very important jobs, but at the end of the day, are they as important as the software engineer? Probably not. So you're starting to see a little reduction there. And from that reduction, ultimately, we're going to see if that leads to an inevitable 50 cut or the inevitable 25 cut that some economists are projecting. Chris CRM says that's me. Yeah, that's me as well. I'm sitting with my computer all day. I'm literally the definition of that type of job. But the point is really jobs that are more high level, that don't require, actually picking something up and doing something. Those are starting to be seen in less demand, which means if you're in one of those jobs, you just got to, we talked about this a while ago, you just have to prove your value to the company. Like you have to keep proving, hey, like I'm one of the best project managers here. Even if I'm not literally typing up the code, I'm the reason why the code gets from A to B, because I'm managing the project and I'm not just sitting around, I'm actually managing it, and that I think, helps people protect their jobs during this time. But tomorrow's job report, that's going to be important. That's going to be very, very important. Cause Why Not says data today is more bad than good. 99,000 versus 140,000 is crap. 227 versus 229, big miss versus tiny beat. I agree. It's a big miss on the top line and a small beat on the bottom line, basically. Like we beat on revenue and we missed badly on EPS. And net income, the bottom line at the end of the day, is what companies care about. So missing on that jobs number is not good. I don't think it's fully bearish yet, because tomorrow we're going to have to see the totality of that data. But it definitely does, bring up the question, hey, is the labor market slowing down to such a degree that we need to pay a lot more attention to how we're thinking of the broader labor market and of, and if the Fed is going to cut based on that labor market. So let's see what happens. But that's the macro update today, at least in the context of jobs. If you're just joining, job growth was a miss by about 50,000. Initial jobless claims was a beat by about 2,000. Overall, tomorrow is setting up to be an explosive, volatile day to see what happens. A couple other reports on the jobs data. So U.S. employers have announced 79,697 hiring plans, down 41% from last year in August, when they announced 135,980 hiring plans. So that's a pretty steep decline as well. If these surveys are not perfect, but based on the data that we have, U.S. employers are not planning to hire as aggressively as they were last August. Now, some of this, I just want to put some color on this, and then we'll get into some other stocks. Some of this is also normal. At the end of the day, like, we added a lot of jobs in 2021 and 2022 because it was the COVID pandemic recovery. So we had 14.8% unemployment back in 2020. Obviously, given, we stopped the lockdowns and we allowed people to go back to work, and we gave people a ton of money. Businesses weren't, and we had the PPP loans. Businesses were not going to stay shut down forever. So they started hiring all the people that they had let go of for 4 or 5 months. And we had a massive surge in employment. So you would expect over a course of a couple of years for that to slow down aggressively. It's not going to be the same levels that it was at back in 2021 when people were coming back to work. However, you don't want to get it to the point where it's negative, aka we're firing net people per month, meaning like instead of adding even 99,000, we fired 10,000, because then we're like full on recession if we're firing versus hiring. And then B, you want to stop that before it gets to that point. So it's normal for it to slow down. It's not like that's not normal. You can't have an economy just constantly grow, but you can't have an economy that slows down and we don't do anything about it, aka the Fed. They don't realize that, hey, rate cuts is at least one way to re-stimulate this part of the economy, and then just let it collapse, have a recession. For what reason? Like, again, if inflation was still at 4 or 5%, I would be like, all right, I guess we have to keep monetary policy as tight as it is, even though the downside effect of that in terms of losing jobs is not worth it, in my opinion, because I don't think you want anyone to lose their jobs just to stop inflation. But if inflation was still that aggressive, at least the Fed can make that argument. Now the Fed can't make that argument because inflation is coming down. And we know it's coming down. And I think the reacceleration of that is overstated. We see energy, we see shelter, we know it's coming down. So what is the point of remaining so tight? Like, there is no point. Logically, there's just not a real point. So I think we're going to get cut. Tomorrow's going to determine if it's 25 or 50, and then the market's going to have to figure out if they care about 25 or 50. Let's transition to Nvidia. So Nvidia right here, down about 0.5%. I'm going to be very curious how the market opens with Nvidia And the reason I'm going to be curious about how the market opens with Nvidia is because apparently Nvidia came out last night and they said we have not been subpoenaed by the DOJ. And this is really weird, dude, because this was a headline that the entire market kind of ran with over the past 24 hours. And then last night at around or last afternoon at about 4 p.m. or 3:50 p.m. right before the market closed, Nvidia said, actually, we didn't get any of this. I have a bunch of questions here. A, why did it take Nvidia this long to like why didn't they say it immediately when the news broke? They don't have an obligation to, but like it is kind of weird that they waited 24 hours to do this. And then B, why did Bloomberg and CNBC and all these guys run with this idea that Nvidia got subpoenaed if they didn't have the right sources? Because obviously I would trust in the company over Bloomberg. If the company says they didn't get subpoenaed, as if the company's not lying, and I would imagine the company's not lying, then they didn't get subpoenaed. So the quote was, we have inquired with the U.S. Department of Justice and have not been subpoenaed. Nonetheless, we were happy to answer any questions regulators may have about our business. Meaning the DOJ never even came to them. So that big rant I gave yesterday morning about how this is anti-American, we're hurting the success of our, like, I didn't even need to do that rant because the DOJ is not going after them. They're sticking with Google, apparently, it seems like. So Nvidia told CNBC, we win on merit as reflected in our benchmark results and value to customers, and customers can choose whatever solution is best for them. It seems like there was not any type of subpoena. So the broader question for the stock now is, okay, there wasn't a subpoena. If the 9% decline on the subpoena was based on the subpoena, right? If the 9% decline was based on the subpoena that we saw last night, call it 12%. Is that going to come back? And I think this is a really interesting thing because a lot of people's theory was, well, it fell 12%, not because of earnings or because of their guidance or because of any of those macro concerns. It was because they got a subpoena, but the subpoena got leaked at 7 a.m. on 2 days ago. So when the news came out after hours, it didn't have that much of an impact because the news was already baked in. Everyone who wanted to sell ended up selling already. Well, if the news was fake, and whoever gave that leak, which caused a $300 billion market cap decline in Nvidia, if that didn't happen, if that news was just wrong and the entire market kind of ran with that story, retail ran with that story, institutions ran with that story, but that story was incorrect, I wonder, do those people come back in? And do they say, holy crap, why did I sell Nvidia? Like, there's no point for me to sell Nvidia if it was based on this DOJ rumor that wasn't real. Part of me wants to believe that Nvidia was sold off because people legitimately wanted to take profits and they were getting scared of an upcoming jobs report and an upcoming recession, if that's going to happen. But the other part of me thinks that a 10% decline is there has to be some news, right, for a stock this big internationally. And it seems like the subpoena was the reason, but now it seems like the subpoena wasn't even real. Remember, Taiwan fell 5%, the Taiwan weighted index, the Nikkei fell 4% after Nvidia fell 11%. Like the entire global economy, Bitcoin fell 5% because the Nikkei fell 4%. Like all of this stuff happened because of Nvidia. And if it was all fake, then I mean, it begs the question, how did that end up happening? One meme that I saw on this, let me see if I saved it. This was the funniest shit. I think I saw, yeah, this meme, dude. This one actually made me laugh out loud, dude. This was a good one. So this is probably what happened, which is what happened for Nvidia. So Nvidia says we have not been subpoenaed. You got a picture of Nancy, and then the caption is, I have Nvidia calls you idiot, as she's on the phone. So I saw this morning and I was like, this is great. I mean, this could also be one of the reasons, dude. Maybe she called up her buddies at the DOJ and was like, are you insane? I have 20,000 shares of Nvidia at $120. And like Nancy doesn't lose. She has not lost all year. She has not lost all year. Really, in the past 5 years, she hasn't lost. I think the only loser she has is Disney, but I don't know what her averages is on that. But besides Disney, she's gotten them all right. So Nvidia falling from that 120 level, given that's her average, that's the one thing we can count on in terms of Nancy having our back there. So we'll see what happens. But someone says right here, I think the 9% decline was just the September profit taking and what you said. Yeah, I agree. I think September is becoming a little bit of a self-fulfilling prophecy. We talked about this on Monday, that if we want it to fall, people will just naturally sell and then the market will fall. And we kind of just have to play out what happens there. But it seems like the September sell-off has absolutely begun. But it's not as bad as outside of Nvidia. I mean, the broader market. I mean, the fact that, look, Palantir, $30.32, still holding 30. SoFi still in that 750 range. Noto did a great interview on CNBC last night. I thought he killed it. and hopefully rate cuts are going to be bullish for them. Noto basically said, hey, the consumer's okay, but if you don't cut by 50 or at least 25, the consumer is going to be screwed. So we're getting the cut. There's still people, on Twitter saying, oh, we're not getting a cut because the Fed's worried about inflation. It's like, no. You're just like, we're getting a cut. The question is, how big is the cut? And is the cut going to be bullish or bearish in the eyes of the economy or in the eyes of the market? And that's the unknown, but I don't think there's an unknown and if we're getting a cut or not. GitLab was up about 20% yesterday, right? Decent earnings, even with Nvidia falling 9%. GitLab was up. Tesla, we'll talk about them in a second. They're up 2.64% after being up 4% yesterday. Wow, 225. Maybe they make a run to that 230 level. So we'll talk about them next. Dix was down 12% at one point. Now it's down 4%, down a little bit in the pre-markets. AMD down about 1%. Like the red really only was in the semis and some individual stocks. The broader market was kind of okay over the past couple of days, even though we started, the selling in September. So it was really Nvidia that had the bulk of the pain. Now, C3 AI, they're down 20% of the pre-markets because this is a company worth $3 billion, doing $87 million a quarter with AI as their ticker symbol. They only put up 20% growth and guided for 23% growth. So at this point, I don't think they can call themselves an AI company that is experiencing an AI tailwind if you're only growing 23%. And the market's adjusting based on that. I said we're going to talk about a lot of AI companies in the startup sector that could maybe justify a lot of the hype around Nvidia. I have a couple of pieces of news to share based on that in a little bit. But C3 AI, one of the public companies that crowns themselves as the king of AI, they are down 20% because they're not showing the growth of AI as a tailwind for their business. Now, there's one bearish thing, one bullish thing to this. I kind of do want to see C3 AI grow because if AI is this big of a tailwind, even the guys that are like, obviously acting as imposters should be able to get more growth than 23% because they're just so much momentum, but that's not happening. So that's one bearish element to the fact that they're down 20%. The bullish element is that all of that revenue is probably going to Palantir because if you're only doing 80 million a quarter, you should be growing at 100% a year. Like Palantir is doing, again, almost 700 million a quarter. Palantir is doing almost 10x the amount of revenue that C3 is doing per quarter, probably because they're winning a lot of deals. Palantir's Maven contract at $480 million with the Wall Street Journal came out last night and said, hey, it's helping the military become 10x more effective, which is really good for Palantir to get a re-up on that deal. That contract, one government contract, is worth more than C3 AI's entire TTM revenue on an annual year basis, which is crazy, right? So the fact that they're down 20% actually makes sense to me. It seems like the broader market is not coming to grips with the fact that they have an AI tailwind, but that's okay. Because other companies are taking advantage of that, and some of those companies obviously are Palantir. We got Chad in the chat says, talk to their customers. It doesn't work. One of the interesting things on their press release. So actually, let me read you guys a quote on this. So I actually sent Chad this last night because I thought it was hilarious. If you go to their transcript and you command F ontology on their earnings call, this is what our boy Tom Siebel says. I'm going to read this quote, okay? He says, as a customer, if you buy a pre-built application, you don't need to define what the application does, design and develop the ontology, the business logic, the AI or Gen AI model pipelines or user interface. We've done all of that. Basically, he's taking shots at Palantir. He's saying, hey, if you buy a pre-built application, you don't need to define this. You don't need to create an ontology or whatever, right? Using that word. Obviously, that word is taking shots at Palantir. We've done all of that for you. So I saw this last night, and I thought it was just hilarious because, if Palantir is the premier AI SaaS name and you're Tom Siebel, you got to, I guess if you want to, you got to take shots at the big dog in there to try to continue to get momentum. When in reality, you're just not showing the growth. And at the end of the day, if you're not showing the growth, then, you're not going to continue to be able to prove to investors that, that you're a name that's worth betting on. The other thing that's really interesting is on their press release, they mentioned that they have all these pilots as like closed deals, but those aren't really closed deals. They're like, we closed 52 pilots and 17 of them were actual deals. And I'm like, why are you telling us about the pilots you closed? Like, we don't care. We care about the actual deal. Like, Palantir doesn't report, hey, we closed pilots. Palantir says, hey, we closed these deals. These are actual customers. And maybe that makes the number lower, but we know there's real revenue coming from them. So the fact that they have to show, hey, we closed these pilots, but those pilots aren't generating any revenue. I don't even know what's the point of saying it on your press release. Here's Karp talking about C3 AI. Some of you guys might have forgot he actually spent 30 seconds talking about them a year ago. Here's what he had to say when he was questioned about C3 AI.
You talked about the competitive landscape. I actually wanted to ask you about C3 AI as an example, because you come up in bidding processes with them.
Actually, look, this is a massive market. We actually don't come up with bidding processes with anyone. And I'll tell you what I think about everyone.
So you don't have any competition?
Let me just tell you about this competition thing that Wall Street analysts love. It's complete BS. This is an infinite market, basically. Try what we're doing and try what everyone else is doing and buy the thing that creates the most value.
You talked about the competitive landscape.
I loved when he said, let me tell you about this competition thing that Wall Street talked about. I thought that was hilarious. But dude, that's the energy you want from your CEO. You want him to be like, dude, screw this competition argument. You guys can worry about competition. I'm worried about product. I'm worried about building. I'm worried about momentum. And the more momentum that our company can keep getting, the less we have to worry about competition. I mean, you don't want a CEO on the earnings call to be so obsessed with the competition and even mention their keyword like the word ontology, because they should be obsessed with their own product and they should just show the results, and the growth should speak for itself. So I think from that perspective, it does seem like Palantir, the reason it's holding this $30 premium, maybe it's because we get into the S&P 500 tomorrow. We'll find out after hours and see what happens. But if that's not the reason, it's because they are the premier AI SaaS, and all the money in AI from investors are probably flowing into Palantir. Okay, let's talk about Tesla. Tesla is up 2.66% right now in the pre-markets. Tesla was up 4% yesterday. Why was Tesla up yesterday? Well, Volvo said they're going to scrap their electric car plans, which was bullish for Tesla. B, the Chinese registrations were up, I think, like 15% month over month, which was also bullish for Tesla. And then C, they came out with that ASS, automatic summons program thing, that allows you to park in a better way. Now, here is their roadmap that they released this morning for full self-driving. And this is also what got the street excited. So Tesla says right here, due to popular demand, Tesla AI team releases our roadmap. In September 2024, we will show the V12.5.2 with 3x improved miles, V12.5.2 on AI3 computers, actual smart summon, the whole ass thing that people have been joking about, ASS, Cybertruck auto park, eye tracking with sunglasses, end-to-end network on highway, Cybertruck FSD. So that's a hell of a roadmap for just this month. And then October 2024, unpark and park in reverse in FSD, V13 with 6x improved miles between necessary interventions. And then Q1 2025, I think this is why investors are really excited right now for Tesla, FSD in Europe, FSD in China. That's a big deal. Now, it is pending regulatory approval, but it seems like it's on the ballpark, on the roadmap to be able to happen, which is very, very important in the context of Tesla's FSD plans. Now, why is this also really important? To me, that announcement, that picture that we looked at right there, that kind of feels like what they would have announced on 10/10. 10/10 is literally less than a month away. It seems like what they outlined in that tweet is probably going to be what ends up becoming reality on 10/10, because my whole thesis on 10/10 is, if you give us specific timelines, the market will reward you. If you don't give us specific timelines, then the market's going to be a little scared, and the market's going to think that you're, continuing to tell us that something's coming, but it's not fully coming. If they end up giving really specific timelines like they did right there in that tweet, then I would imagine that this is just an outlay, a preview of what they're going to say on 10/10. And then when they introduce the Cybercab and they full on introduce what a real robotaxi app is going to look like, and they start rolling it out in Austin or Vegas or certain parts of San Francisco, whatever it may be, I think the market will reward them. So the jobs report obviously matters. The unemployment data obviously matters. If we price in a recession or not obviously matters. But it does seem like this is bullish for Tesla. Now, one thing about rate cuts in Tesla, I don't know if rate cuts are going to be the most bullish for Tesla. Obviously, they will be somewhat bullish. But my friend just bought a Tesla for $640 a month because he got that 0.99% APR. He got it the day it closed, so he got to take advantage of it right before it closed. Let me know in the chat if you got to take advantage of that APR. And that dude, like $640 a month to buy a Tesla for 72 months is not a bad idea. I mean, like, that's like, I was thinking of shit. Should I, like, $640 is not that crazy to get a Tesla. So I think a lot of people hopefully took advantage of that. And we'll see in the delivery numbers this month when we see how much Tesla delivered. But I don't think rate cuts are going to make Teslas even more attractive. Now, maybe the marketing because of rate cuts just gets the average consumer to think, oh, because rates are down on a federal level, I can maybe afford a Tesla now. And they go into Tesla and then they get exposed to the fact that you can get a Tesla for maybe $700-800 a month. But that ultra 0.99% APR, that promotion, I believe, is done. But if we get a rate cut, maybe people still get more excited and demand increases. So rate cut perceptually is good for the stock. I don't think it's going to increase orders that dramatically because we've already had low APRs for Teslas. But I do think September delivery numbers hopefully should be better. We need to get about 594,000 cars delivered in Q3 and Q4 to CAGR a 10% delivery rate from the 1.98 million that they had last year. I don't think that's going to happen. I think the CAGR rate is probably going to be closer to 7 or 8% because, Tesla's probably going to do another 450 to maybe 485,000 cars delivered in the last 2 quarters. But still, if the pivot is now to rides and FSD and not actual deliveries, Tesla right here up 2.7%, then it might not matter how many deliveries that they end up doing. P. Norton says crazy for a car payment. Yeah, 640 is definitely it's up there, but I mean, 640, like from what I understood when I looked at Tesla financing before, it was close to like $1,100, $1,200. And so when my friend texted me and he showed me all the plans and he's like, dude, I'm getting it for 640. And I'm just like, I'm getting it done. I was like, that's not crazy, dude. I mean, 640 is not, my car payment, my Honda Civic, it's paid off now, but it was 311. So it was very manageable, right? Nothing crazy. $300 is not crazy, but I have to ask myself, would 640 have killed me? Not really. It would have been annoying to pay that extra 300 a month, but it's not like it's like 1,000 a month or 1,200 a month. So I do think people took advantage of that APR. The question now is just how many people took advantage of that. And, if those deliveries ended up playing out. That's over 50K for 6 years. Yeah, I think the car was like 54,000 overall. So it's a little bit over 50K for 6 years. NIO had earnings. NIO stock is up, but they missed and on revenue and EPS. So I don't really know why the stock is up. To be honest, NIO has always been a very confusing company to me, but they missed on EPS. They missed on revenue. Sales are up 87% since the past quarter. They have $5.7 billion in cash. Their net loss has decreased by 16%. So maybe that's why the street is excited. But against expectations, they missed. So the street wanted them to lose about 31 cents. They lost 31 cents versus 30 cents. Revenue was about 2.4 billion versus 2.44 billion. So revenue is actually up 90% year over year. It's just not as good as what the expectations had. But the numbers themselves aren't horrible, which is probably why the stock is up a little bit right here at 4%. Again, when it comes to buying EV stocks, I feel like Tesla is the only company that makes sense to buy. A lot of these other players are just not that interesting. There may be some undervaluation there, but what you're getting when you buy Tesla is in my opinion, I know it's a cliche, but it's an ETF of so many different businesses. And it seems like those businesses are finally starting to materialize based on this roadmap that they gave us this morning. And now in 10-10, Elon just has to crush it. And I think if Elon crushes it, it's going to be pretty exciting. $640 a month for a Tesla, but zero fuel cost. That's another thing. You got to pay zero for gas. Zero for gas is important, dude. I mean, I pay. I mean, I don't drive as much anymore, but when I was traveling up and down New Jersey a couple of years ago, I was paying a week. How much was I paying? I was paying at least $60 a week for gas. Yeah, at least $60, bro. That's when gas was like $3.50, $3.60. So you call that basically $240 a month. That's like almost close to my car payment at $311, bro. That's kind of crazy now that I'm thinking about that. Yeah, because I was driving 120 miles back and forth every day. So it was a lot of gas I was using. By the way, so did you guys know, I was reading an article this morning. Did you guys know the United States is producing 13.1 million barrels of oil a day? So this whole drill baby drill thing that Trump's on, we're drilling a lot already. I mean, we are drilling pretty aggressively when it comes to, we are the largest exporter of gas, and we are producing more gas a day, more barrels of oil than the Saudis and Russia, obviously, than everybody. And part of the reason for this is because when Russia invaded Ukraine, a lot of European companies or countries decided they can't work with Russia anymore to get their oil. So the US stepped up and we started creating a lot more oil, which was fulfilling the demand. On top of that, in 2014, some new fracking technology I read this morning essentially made our fracking capabilities way more efficient. So if we found a rock that we started fracking with, we would, instead of getting 8 million barrels of oil, we could get like 13 million barrels of oil. We almost doubled the capacity in terms of the number of barrels of oil that we were fracking, and that created A, less oil prices at the pump, less gas prices, but B, a lot more energy efficiency for the United States. So when Trump says to drill, baby, drill, I am curious what types of regulations or technologies he's going to evolve in because I think it's a good idea. I think we should drill, baby drill. My question is just how much more can we do? 13 million barrels a day is definitely a lot. And so the question is, how much more can we do? So if you buy a Tesla, obviously you don't have to worry about those gas prices and oil prices, but the rest of the world still does. And the shift to renewables, the shift to EVs, it's going to beg the question, how much more oil do we consistently need? Now, I don't think oil demand is going anywhere anytime soon, but I am curious, how much more can we expand it in the United States? Because that's one of his main campaign platforms. And now the question is going to be, how much more do we actually get from that 13 million that we're currently doing right now? I mean, there's the environment and stuff. Well, there's also the environment. Yes, obviously that. See, the environment does matter. I get it. The problem is, dude, my beef always with the environmental argument, and I'm not someone who denies climate change or anything like that. Far from that. Is just I feel like a hypocrite when I complain about the environment and then I go and I drive 20 minutes to the gym in my car and I let off all these carbon fossil fuels. It's more of a personal thing that I have with the climate change argument. I'm not contributing to stopping climate change. Therefore, why am I complaining so much about climate change? It's more of a personal thing. Some people may agree with that. Some people may disagree with it. On a holistic view, I do think we should do things to stop the degradation of the environment. But if I'm going to get on a plane and I'm just to go to India to see my family, that's a luxurious thing. That's not a necessity. I don't need to go to India to see my family, but I'm leaving a massive carbon footprint to get on that plane to go see my family for life experiences. And I'm choosing that life experiences over the environment. This is my problem with people like Greta Thunberg. I'm like, she's very young. I'm young and I already don't know so much about the world. She's younger there. She's like 14 years old and she's acting like she knows so much about the world. But when you do a public protest in the middle of Germany, when people need to get to work, working class people, not billionaires, people that need to put food on the table, and you're saying that they're the reasons why the world is bad, it's like the lack of humility there to me is something that I think needs to be addressed. So climate change is an issue, but I feel like a hypocrite every time I talk about it because I'm the one who's contributing so much to it, Greta's 21 now? What? Holy crap. Well, she grew up in front of she's been protesting. She got arrested. The reason I thought about it is because she got arrested yesterday. I think it was in Germany or Denmark. She got arrested again. Every time she protests, dude, they just arrest her and then let her out. They just arrest her and let her out every time. And then she goes back to protesting. It's like a game at this point. But that's why, the climate change argument is interesting, but it's one that I don't think I have the authority to speak on because I constantly am a hypocrite when it comes to it at the end of the day. Let's get an update on jobless claims. We got the market open in 6 minutes, and then we'll keep going from there and see what else plays out on the market. Here we go.
229 on jobless claims, and for the productivity to rise up to 2.5% from 2.3%, and unit labor costs to be revised down, but it should be hitting just about now. And there it is, jobless claims, 227. They will not confirm the weakness that everybody's waiting for it to confirm. That's down from down from 232,000 the prior week. Continuing claims falling to 1.838 million from 1.86. So the number of people accumulating in the jobless in unemployment insurance declining there. Non-farm productivity coming in right at estimate 2.5%, revised up from 2.3. Unit labor costs, wow, revised to 0.4 from 0.9. Guys, this is really confirming for a piece of data that I know the Fed chair watches pretty closely, that the inflation impulse from labor has really come down quite markedly. We
basically saying the labor market is weak. He's saying what the Fed wanted to do by getting the labor market to not be as aggressive as it was before, they succeeded. And now it's time to probably think of, hey, maybe we need to cut some rates. All right, let's do one last segment before we get into the market open. We got about 5 minutes. Here's a headline I saw yesterday that some of you might have seen if you follow me on Twitter. Some of you might have not seen that. And by the way, at 10:30, we're going to have Will from Granite Shares, who is the CEO of the company that's making all these leverage ETFs. He's going to hop on the channel for about 15 minutes and tell us a little bit more about the mechanics behind all these levered ETFs. Obviously, the 2x Palantir levered ETF came out yesterday. So the guy who left OpenAI, Ilya Stutzvecker, so I don't know how to say his last name, but his first name is Ilya. This dude was the reason OpenAI became a $100 billion company that Nvidia, Apple, and Microsoft just invested in over the past week. He left a month ago. All of us were like, why did he leave? None of us knew. Now we know. He just raised $1 billion to start a new AI startup. Let me say that again. He raised $1 billion, not a $5 million pre-seed, not a $2 million Series A, $1 billion at a rumored $5 billion valuation. So he sold about 20% of the company to start a company called Safe Super Intelligence. From the company's website, we have started the world's first straight shot SSI lab with one goal and one product, Safe Super Intelligence. This is the most important and technical problem of our time. So here's my question to everybody. I'm still confused on this. Is there so much money ready to fund AI companies, proving that AI is really just getting started, which is the bull case for Nvidia, that if VCs are able to put $1 billion into a company with zero product and zero roadmap, you could say, outside of what the founder told the VCs, that there's just so much insatiable demand for AI? Or is this feeling a little bit like a bubble? Because last time companies raised at these valuations with zero products was .com, and those companies weren't even raising money; they were legit going public. So that they're the public markets were their liquidity to raise money with no product. And then the time after that was 2021, when you had all these stupid NFT Web3 companies raising. I mean, OpenSea raised $300 million at a $13.3 billion valuation when everyone was trading NFTs. Now NFTs are kind of important, but not really. I mean, those companies were just raising at ridiculous valuations, right? So I think it's a little bit of both. That's my perspective. I think this is a little bit bubbly. I think for investors to have this much faith in this guy, to give him $1 billion. Now, look, he's earned it. He made OpenAI. The looming elephant in the room is, why did he leave OpenAI? Right? I think everyone's still trying to figure out, hey, what was your beef with Sam Altman to leave a company worth $100 billion? Like that's pretty intense. But I do think it's also a little bit bubbly, because if you're going to give to not give 10 million, 20 million, 30 million to test it out, to just give the guy $1 billion, basically you're saying, hey, we believe AI is so real that we think this is going to go right no matter what happens. And that's good for like the AI thesis. I think a lot of that $1 billion are probably just going into Nvidia servers and GPUs. But it's also like, hey, what if they fail and you just wasted $1 billion, you know? So I don't know. I think to be objective there, it's definitely not like, yay, all this money's being raised and this is awesome. But I also think, hey, you can't hate the fact that the guy from OpenAI is able to raise $1 billion because he worked up a hell of a resume. Now the question is going to be if super safe intelligence, even matters. Here's my big problem with the concept of the company. I don't know what it is, but I'm imagining they're creating some type of safe version of AI. Okay, that's fine. That's great. Ideologically, you can agree with that. The problem is they're going to have to buy so many GPUs to train so many models. Like, you can't avoid the GPU purchases just to be able to make super safe AI, even if you do it with your safety algorithms. So all that money is going back to Nvidia, which then becomes the question, is there a market for super safe intelligence? And does Nvidia just keep getting more from these startups? And I think that's going to play out over the next couple of months, and we'll see if it's a bubble or if it's not. All right, here we go. 9:30, September 5th. Thank you, everybody, for being here. The stock market is once again open. Wake your ass up. Here we go. Tesla opens up 2% on the day. So you got Tesla. It was at 226 in the pre-markets. Now it's at 224. There's a nice little green candle right there. Tesla's up about 7% for the week right now. So nice to see Tesla continuing to get a little bit of momentum. Where's Nvidia? Again, Nvidia's DOJ subpoena apparently was BS. You got a green candle right there. Nvidia came out yesterday after hours and they said, hey, we never got subpoenaed by the DOJ, but if they want to talk to us, we'll talk to them. Maybe they haven't subpoenaed them yet, and maybe that's going to happen, but it hasn't happened so far officially. So we'll see if that has any impact on Nvidia. Nvidia down about 1%. As we open the market. Palantir down about 1% as well, $30.25. S&P 500, 551, basically flat on the day, but it is green. NEO up 5.9% after missing on revenue and EPS targets, but beating by 90% year over year in terms of their growth rate. C3 AI, dips getting eaten up, down 15%. It was down 22%, so people are stepping in and buying a little bit of the dip. Celsius continues to have its struggles. We talked about this yesterday on the market close, but apparently the Celsius CEO went in a Barclays conference, and he said that our margins are being compressed due to the Pepsi deal. And the reason our margins are being compressed is because Pepsi is ordering 120 million less units from Celsius in Q3. And so after he admitted that, the stock fell 11%. And now it's kind of in no man's territory. So we'll see what happens to this one. But margin pressure is definitely hurting them. They're down 66% from the top. It was $99 back in February, and we'll see if any buyers step in. NVDL, leverage ETF on Nvidia, 45.25. That's down about 1%. Bitcoin below 57,000. I bet Robinhood is probably below 19. Robinhood 1894. There you go. Down about 1% on the day. That's probably because of Bitcoin taking a little bit of a fall right now. As we open up the markets, Apple up a little bit, 222. Intel 1925. SMCI down 3.5%. SMCI continues to get hit in that low 400 range. Really can't find a way out of it. Again, cyclical gross margins, cyclical business gross margins are below 15%. Street's really not giving them any credit. SMCI, by the way, is in the S&P 500 along with CrowdStrike, two companies that got demolished over the past 6 months. So, I mean, when you think about Palantir getting to the S&P 500, Palantir would not delay a 10K form, and they definitely wouldn't have a global outage like CrowdStrike did. So hopefully the committee thinks of Palantir as one of those important companies, but we'll see what happens tomorrow. Google at 157, CleanSpark at 870, CrowdStrike right here down about 1.35% at 255. Coca-Cola down a little bit on the day. Palo Alto 344, Zscaler 157. They were down about 17% yesterday, having a little bit of recovery right now and turning green. Netflix at 673. PayPal is green on the day. PayPal 73.43. Nvidia now turns green, 106.44. Nvidia goes green. PTIR, the 2X leverage fund, is active for Palantir. Volume about 2,000 shares. For those asking if I'm buying this, let me be very clear. The answer is no. I am not buying the leverage ETF on Palantir. I don't buy any leverage ETFs, to be honest. I would rather, if I have 20 grand that I want to allocate into Palantir, I would rather allocate it into Palantir over PTIR. The simple reason is PTIR and all these leverage ETFs are trading instruments, meaning if you see a massive undervaluation or an asymmetric opportunity and you want to sell some puts or buy some call options for the short term, that's what it's used for. In my opinion, it should not be used for something that you buy and hold for the next 10 years, because you don't even know if it's going to be around for the next 10 years, but Palantir hopefully is around for the next 10 years. And I'd rather have more ownership over the company. So I think it's a really cool trading instrument. I do think it's good for Palantir because you get more ETFs like this one having to buy Palantir and more people indirectly getting exposure to Palantir, more people caring about the company, which is what NVDL, that's up 300%, did for Nvidia. But if you think Palantir is going to go to $50 next year, I would not buy PTIR in my opinion, because it's just way too volatile for the upside or the downside. And the net asset value, again, does get diluted daily. That's how these leverage ETFs work. So you really have to understand that before you think that this is the way you want to play on Palantir. S&P at 550, NEO at 430, SoFi 753, C3 now down 14%. Dip is getting bought right there. Apple at 223. Let's look at the Mag 7. All green on the day. Look at that. All green on the day. Not bad. Google's green, Meta's green, Microsoft's green, Apple's green. There was a report yesterday that came out on Microsoft that they have a very small amount of people that have converted into Copilot. That was kind of bearish, but it's also kind of bullish because it means there's a massive opportunity. Now, one thing is Salesforce said this, and a couple other companies said this on their earnings call. A lot of clients are like going to other SaaS companies and saying, hey, Microsoft Copilot sucks. And I've personally heard from some people in the tech space that are using Copilot. Let me know in the chat if you use Copilot at your corporate job. They're just not impressed with it. So I think Copilot is an interesting product. I do think it has a lot of room to grow, but it's not the product people think it is yet. And so that report that came out yesterday, basically the bullish perspective is, hey, there's a lot of room to grow. The bearish perspective is they're not really signing up as many people on Copilot. Now, granted, they have 400 million Office users, so they have a lot of opportunity to convince people to buy Copilot, which is an extra $30 a month. But if they don't, some of those AI revenues are not going to materialize for Microsoft. Nvidia's green, up 1%. So you're seeing some momentum here. Maybe people stepping in to buy the fake DOJ dip that ended up happening. Wow, Tesla up 3%. 226. 226 on Tesla. Some of you guys all right, so a couple of you in the chat saying Copilot sucks. A couple of other you guys in the chat saying Copilot's great. So it's kind of 50-50, which makes sense. That's kind of conducive with the report that came out yesterday on Copilot. Yeah, Doug says Copilot sucks. Other people says Copilot is great. I think there's a lot of room to improve on it. I think GPT-5 is going to make it even better, but it's not penetrating the enterprise as much as people think that it's doing right now. Amazon up 2.3. All right, Amazon's getting some green. It looks like Mag 7's being bought up today. Interesting, dude. It's very interesting the Mag 7's being bought up when we have a jobs report coming tomorrow. You would imagine if that jobs report is bad, Mag 7 is not where people go for safety. I don't think that would be the case. IWM is down, obviously, because Mag 7's up. Tesla right here up almost 4% on the day. If we get a bad jobs report, I don't think people go to Mag 7 for safety. I think they go to Berkshire Hathaway. I think they go to McDonald's. I think they go to Coca-Cola. They go to defensive. They go to healthcare. Because even though everyone's probably still going to shop on Amazon if we get a recession, and again, the jobs report tomorrow will let us know if we're like legitimately pricing in a recession, Amazon still will not have the best operating margins, and they definitely won't have the volumes of people buying stuff as if we didn't have a recession. I mean, you will still have people buying. It's not like they're going to go out of business or anything. It's just not going to be as much, in my opinion, as if we didn't have a recession. So that'll make Amazon take a hit. And then if Amazon has to lay people off, that's going to create problems internally in the company. AWS might have to pull back on some of the contracts they have with other companies using their cloud workload. So I think the Mac 7 is not safe if we get a recession. Apple is definitely not safe. No one's buying an iPhone if we have a recession. So it's interesting that they're up right now. It's very interesting that the market's choosing to give them some green over defensives. Well, let's see Berkshire. Is Berkshire up right now? Wow, Berkshire's red. The market's selling Berkshire to buy the Mag 7. Very interesting. They would go to 30-year treasuries. Yes, I agree, AJ. They'll probably go to bonds as well. So but that's my point. Because we don't know what the jobs data is going to be tomorrow. It's very weird that the market is piling into the Mag 7 right now versus other asset classes like defensives or like bonds. This is, dude, they're green across the board. And you could say they've been red for the past 2 weeks. That's why they're getting some love. But the day before one of the most consequential jobs reports in 2024, it's interesting that this is happening right now. And they're selling off. Look at Tesla. Tesla's up 4%. Look at that. They're selling off Coca-Cola and American Express and Berkshire Hathaway to buy up Tesla. Interesting little rotation back into growth, at least for now. It could be algos. Yeah, it could be algos as well. Green across the board, though, is very interesting for the algos. Max 7 most certainly is up because people wanted somewhere to put their money after Nvidia sell-off, and small caps aren't going to see a play till rate cuts. You can make that argument as well. I mean, small caps have just been left to dead, dude. I mean, I still believe that in 2025, if we get a good rate cutting cycle, there's undervaluation here. But so far, in anticipation of those rate cuts, the market just hasn't been giving them any real love. Pounds are at 30.55, SoFi at 7.54, Tesla 2.28. Tesla now going beyond 4%, 4.3. If we see 5% and get closer to 2.30, that would be really exciting for Tesla. That would be up 10% in a week on Tesla. S&P 500 at 552. That would be 70 billion of market cap. They added 30 billion this morning already. So that would not be too bad. NVDL is up 4.5%. Robinhood back above 19. Robinhood did expand stock lending to Europe, to the UK yesterday. So that was one headline that was good for them. They'll be making some money off the people that choose to lend out their shares in the UK markets. Again, UK, not that big of a deal for Robinhood yet, but they're slowly putting out new features in that market. S&P at 551. NASDAQ has to be green by about, I would say, 0.5%. NASDAQ up about 1/3% right now at 461. Looks like the jobs data didn't get the market to be upset. For those that are just joining, the jobs data was 99,000 jobs added, private payrolls in the month of August versus 145,000 expected. Market doesn't care so far. It's almost like the market kind of priced that in, and now they're waiting for tomorrow's jobs report to really make a decision on where they want to go. This also could be a little bit of a bull trap going. This could be algos buying up stuff, and then they're going to be ready to dump tomorrow morning or late today night after they get it to the prices that they want to get it to be. But I am surprised and perplexed that we're so green given the jobs report that's going to come out tomorrow. Bitcoin mining ETF is up about 2.7%. Snowflake up a little bit. Meta up 1.2%. Again, Amazon up almost 3%. Spotify's down a little bit. Shopify's up 0.5%. Verizon acquiring a company. That's why they're down. If I'm not wrong, dude, I think Verizon's paying $20 billion for Frontier, for a company called Frontier. I think Frontier Fiber. That's a decent amount of money that they're shelling out, and that's why they're down a little bit right here. But we'll see if that deal ends up getting approved. Adobe right here at 568. Where's Disney? We haven't looked at Disney in a while. Disney's stuck at 89.44. Disney over the past month basically flat. It was at 94, now it's at 89. Yeah, really has not moved too much. Year to date, Disney, in the beginning of the year, Disney was 89. Wow, literally January 3rd, Disney was $89.21. Today, Disney is $89.44. So no real movement there. And Tesla still maintaining momentum right here at 228 on the day. ISM services at 10 a.m. Yes, we do have ISM services, so we'll see what happens right there when that comes out. ISM manufacturing was not good on Monday. It was a little bit better than expectations, but it still wasn't good. It's still showing that we're contracting. Palantir right here at $30.53. So we'll see at 10 a.m. what happens. PTIR, the 2x leverage ETF. This is at $25, so this one's up a little bit right now. Let me see the assets under management that is collected so far. Let's see if that updates for me. Nvidia also green. AUM is about $749,000. So less than even $1 million is in PTIR. So it's definitely not as liquid. Yeah. So you would want to see at least a couple tens of millions inside of that ETF, but so far less than $1 million inside of it. And the expense ratio is 1.15%. So that's another thing to remember, that there is a fee on the ETF if you do purchase it. Will UiPath tank after earnings? I have no clue. If I had to bet, I would say maybe they're flat because they've tanked so badly this year that the street gives them a little bit of the benefit of the doubt on earnings, as long as they kind of beat their numbers. They do have $2 billion in cash, which is good. $7 billion market cap, but I don't know if robotic processing automation really has a moat that's sustainable. So far, not really sure how they'll play out, but after hours, we'll see. Broadcom today as well. Let's look at the semis. Broadcom's going to be a really important one after hours. So Qualcomm's down a little bit. Broadcom is down going into the print. Broadcom peaked at 180 this year, 185, and then it fell all the way on August 5th to 130. That was a good dip to get into. Then it ran back up to 170. Now it's at 152. A lot of people say this company is a bit more important than Nvidia in terms of the broader semiconductor supply chains. So we'll see today the numbers that they put up. Nvidia up almost 2%. AMD down a little bit. SMCI now recovering. It was down 5%. Now it's down 1.2%. Intel getting some green. ASML down 1%. Broadcom down about 1%. Dell down 3%. Wow. Market's not messing with Dell. Dell was at 117. Now it's at 105. Micron as well. Again, this one has just been a sad story. This was at 150 3 months ago. Now it's at $88. So that one is taking a hit. And Nvidia right here is up about 2% on the day. Sam says Path's moat is shrinking and getting taken by Microsoft and other automation platforms. The Path has a specific niche so customers can be sticky. Yeah, that's the thing. Their moat is like getting delegitimized, but the problem is they do have a very specific niche and use case. So I would imagine they put up decent numbers, but it's not like they're going to guide for 30% growth. And we saw what happened with C3 AI. If you can't guide for at least 30%, which is why Palantir really needs to make sure they guide for 30% in Q3, or at least close to that. C3 now down 12%. The market just ends up punishing you, especially if you think AI is a tailwind for RPA or whatever C3 AI is doing. Like if it's a tailwind, the numbers have to be there. And again, that's why I don't think this is a clown market. A lot of people say this is a clown market. These premiums are ridiculous. I'm like, dude, if you don't show the numbers, the market takes off the red nose from you being a clown. If you show the numbers, you get to keep on being a clown, I guess, if you want to use that metaphor, right? But if you show the numbers, you get to keep winning. If you don't show the numbers, you get wrecked. And so that wasn't happening in 2021. 2021, you could show up with like a cup of pudding to the earnings call and investors would be like, hey, can we buy more? Like it was a clown show, legitimately a clown show. I don't think that's the case going on right now. Palantir at $30.64. Green on the day. Is the Mac 7 still green? The Mac 7 is still green. Meta's green, Microsoft's green, Apple's green, Amazon's green, Nvidia's green, and Tesla 4.1% on the day. Tesla continues to be green, which is not bad. We're continuing to see more and more of that rotation, at least intraday, back into what we have for Tesla. What else do we have? What else do we have? Let's see what other headlines we have going on. Let's see what other headlines we got going on. Thank you, everybody, for being here. Good morning. Good morning to everybody. Thank you again, guys, for being here. HPE, yes. So this one took a big hit. The HPE actually showed some decent numbers based on AI. They're down now 7% yesterday. They did say AI was a tailwind on earnings, but market not really buying it so far. So they're down about 7%. We don't have any earnings this morning. Tomorrow is going to be the broader earnings. Does Dell get into the S&P 500 tomorrow? So Dell and Workday are the companies that are rumored to be into the S&P 500 tomorrow. I think if they pick Dell over and Workday over Palantir, it would be pretty stupid, dude. Like it would be really ridiculous. But at the end of the day, I think that probably is more likely. If we take a look at Dell's institutional ownership, I'm Googling it right now. Yeah, 74%. Let me just share this right here. 74% on Dell. That'll get the committee all excited. And then Workday, which again, I don't know how important Workday is, but Workday right here is how is Workday at 101% institutional? So this is what the committee wants, dude. They want Workday, they want Dell, they want these companies where there's going to be less volatility because of the institutional ownership. On Daily Palantir yesterday, I put out a newsletter, and that newsletter showed institutional ownership for Palantir being at only 44.1%. It's going up, but it's only at 44.1. And because it's only at 44.1, that is the reason I think we could get rejected tomorrow. I really hope that doesn't happen, but that is, something that could happen, and that's what we have to watch out for. So Dell, Workday, and I think there's another company that could be included tomorrow. Palantir and Robinhood are both eligible, by the way. I don't think they're going to get included, but Palantir and Robinhood are both eligible, so there's a chance it could happen. But if it doesn't happen now, I think 2025 it'll probably happen, right? So it'll take some time, but I think it'll get there. Okay, Chris just said he sent something. Let me pull up my WhatsApp and see what Chris sent. What is this, Chris? Okay, Chris, I'm not playing this. This is some random. Yo, Chris's Twitter, he sends me these random freaking videos. I'll put it in the chat if you guys want to listen to this, but this is like some random video that Chris sent me. Chris's algo is like fueled with these crazy memes and videos that he just, I thought he was going to send me some economic data. Look at the GDP. No, he sends me some random meme that everyone can see. Bought in NVDL this morning, turned out to be a good decision. Well, yeah, NVDL is up this morning right now as well. So there you go. That's up 3.6%. Qs are up a little bit, 0.23. Robinhood still red on the day. Nvidia still gaining momentum, up 2%. Nvidia's green. And then Tesla right here at, wow, Tesla 229. 229. Not bad. Tesla might try to break this 230 level. Really interesting rotation, dude. Did not expect this type of rotation right here. I mean, it's nice to see. I didn't expect it this morning. Here's the meme. If you guys want to see it, I'll put it in the chat. It's not a woman making a sandwich. It's someone dancing to Bollywood music. It's kind of fun. Chris, I can't even play this because YouTube's gonna copyright it because of the music. So if you guys want to watch it, I put it in the chat. But yeah, we definitely can't play it on YouTube. Elon better deliver on 1010. Here's my thing on 1010, dude. I just hope it's still happening because there still has been no invitation that's come out on 1010. We still have no invitation. And so, like, I really hope that thing is happening, but the influencers haven't gotten their invitation. The analysts haven't gotten their invitation. So I really, really hope we still get the invitation and it's like legit. I would imagine it's legit. But if it doesn't happen, that's going to be a little scary. Oh, one of the other reasons Tesla might be running is because there was some news, as Adam says right here, about Trump. Elon said, I think today, that he has accepted Trump's proposal of being an advisor and consultant to the new administration. And it's not a cabinet role, but it's one of those roles where he's going to be in charge of, like, I think it's called the Government Efficiencies Agency, something like that. Basically, he's going to oversee how to make the government more efficient, something like that. And that news this morning was on some headlines that came out. Maybe that's also helping Tesla. I think it was more so about FSD, but that could be one of the things that's getting the market excited. Okay, Alex Chris just tweeted. We haven't seen Alex Chris tweet in a while. Here's him using his PayPal card. He tweets right here, today we're ushering in a new era for customers, making it easier for them and more rewarding than ever to shop and pay with PayPal. PayPal is a go-to payment option for hundreds of millions of customers' online purchases, and now we're expanding in-store so our customers can have richer and more rewarding experiences wherever they shop. It looks like you're able to pay a little bit in a more easier way with PayPal at your local store. It was front page of Wall Street Journal, right? Yes, that's what I thought. It was front page of Wall Street Journal. Yeah, that's why. Even if it's news that came out a while ago with Tesla and Elon and Trump, it was front page of the WSJ today, which is why some people might be buying it based on that. You know what's interesting? Whenever I have to pay at a store like this, the first thing I use is Apple Pay, and I use a credit card. I don't use PayPal ever in those situations. Let me know if you guys use PayPal. But Tesla right here, 229.9. It hit 230.4. Really getting some momentum today. So in those Apple Pay situations, I end up using PayPal way more, or I end up not using PayPal like ever. But maybe if they make it easier, there's another way to increase that transaction volumes for PayPal, which obviously is going to help its gross margins. So Tesla right here hit 230 twice, now at 229.82. Let me see the resistance on Tesla. Let's look at the order book flow on Tesla and see what we've got going on. So Tesla right here, resistance on Tesla at 230 is 7,000 shares. That's not a lot. I would imagine that can get eaten up. And then at 235, you're looking at 20,000 shares. So it needs a little bit more volume to pick up, but it's not like the resistance is that dramatic. Is there a 2x leverage for Tesla? Yes, it's called TSLY. This should be up 8% or 9% on the day. Oh, sorry, no, that's the I'm talking about TSLL. TSLL, yeah, it's up 9%. So again, this is the thing about these leverage ETFs. It can make you really excited because if you're bullish on Tesla, you might be thinking, oh, well, why would I want 4% if I can get 9% in the same time frame? The problem is when it goes down, the downside volatility is also aggressive. And you kind of don't want to hold something like this for the long term because of the dilution and the net asset value erosion over time. Whereas Tesla, for the most part, if it does well, they're going to execute and you will make a return on your investment. So the ETF is a play and it's a trading instrument, and there's a good way to sell options on it and get premiums and stuff like that. But I don't think it should be money that if you want to allocate to Tesla, it ends up going into some leverage ETF. So Tesla right here up 4.7%. The ETF up 9.3%. NVDL up 3.6% because Nvidia is up 1.5%. Robinhood at $19. Palantir at $30.44. Dell at $105. But Tesla, really the star of the show today, continuing to get momentum. I tried to own ARK, but sold out and just bought more Tesla. I mean, yeah, dude, at this point, it's kind of getting embarrassing to see what's happening with ARK. Like, and I love Kathy. I do think she is someone who called Tesla early, and that's really important, right? Because she called Tesla when a lot of people didn't call Tesla. But the performance of the ETF, dude, it's just like it has been one of the most ridiculous forms of capital erosion for investors that I've ever seen, bro. Like it's up 1% in the past 5 years. And there's Tesla, there's Coinbase, there's a lot of good companies in there. It's just there's so much fat in there that it ended up not being the best. Now, granted, they can still outperform if Tesla goes to the moon, but that just might take some time. That's not going to happen anytime soon. Check out the MicroStrategy 3x leverage ETF is down 80% year to date, while MicroStrategy is up 80%. Thank you for that comment, Mike. That is a perfect example. The MSTR 3x leverage ETF, I saw this actually 2 days ago. It's down 80% year to date because of the daily dilution and the net asset value erosion, whereas MSTR is up 80%. Why? Because MSTR is very volatile. And so unless things are going straight and up and to the right, if they keep going up and down, you're going to get a lot of problems with these leverage ETFs, even if they're good trading instruments. But a company like MicroStrategy that's fully based on Bitcoin, given Bitcoin goes up and down, that's why you have MSTR go up and down as well. Tesla at 229.98, so 230 looks like it's going to be able to crack that if the volume continues, and then if it can crack 230.5, we should have a little bit more momentum. Gary Black just posted he's modeling a 15% global take rate on FSD. Okay, let's pull up his tweet. Let's see what Gary has to say there. Is that good or is that bad? Is 15% good or bad? I feel like that's like decent. I don't think that's horrible. Yeah, Tesla now 230. There you go. Tesla's at 230. There you go. So Gary Black says greater FSD functionality increases FSD take rates and 2 sells more Tesla. We currently assume a 15% global FSD take rate in our 2024 to 2030 forecast on new deliveries and a 10% FSD take rate on the existing North American fleet. Every 5% increase in total FSD take rate generates 0.5% share incremental earnings, assuming 50% mix of purchase and lease, and brings Tesla closer to being able to offer robotaxis. Yeah, the take rate today, there's less than 1 million people that pay $99 a month for FSD, right? So the take rate today is like not close to 5% or even 10%. So I would imagine 15% is better than what most people think. Tesla's been on such an interesting journey this year, dude. It went all the way down to 130. If you look at the year-to-date chart, was at 260 in the beginning of the year, January, came all the way down to 130. This is when Elon was worried about getting paid and all that stuff. Then bounced up to 180 after he got paid. And then from there, went on this crazy run to 270. At $300 billion in market cap in literally 4 weeks. And now it's back at 229, which is not horrible. But that 10-10 event is probably going to determine if it has a chance to come back to 270. But as of now, it's, kind of just teetering around that level. That's only because the ETF was launched when MicroStrategy was priced higher. That's fair. I mean, look, that is fair. It's just, this is the thing with the leverage ETFs, right? At the end of the day, they are very contingent on the underlying asset and how the underlying asset is going to perform over the long term. Here's a little bit. All right, so let's go through some macro charts. We'll get back to Tesla in a little bit. Here is a chart I want to show on what happens to the S&P 500 12 months after the first rate cut. So as you can see, in January 2001 and September 2007, 12 months after the first rate cut, these were the worst performing moments in the broader stock market. You had January fall 13% on the dot-com crash. You had September fall 17% off of the housing bubble that we had in 2007, 2008. Outside of those two moments, every other time we've cut rates 12 months later, not 5 months later, not 1 month later, but 12 months later, the S&P 500 has done well. Now, this chart has a lot of nuances to it. There's a lot of arguments you can make here and there about different moments. But one thing is for sure, after we get this rate cut, unless we have a dot-com style crash, which could happen with AI, theoretically, or we have a housing bubble crash, which I don't think we have a housing bubble right now, but we could have some type of massive unemployment levels that we see based on other external factors in the macro. It seems like the broader market's going to be in a good spot 12 months after the first rate cut if, and the big if, is unemployment doesn't have a trajectory that goes higher. The difference between a lot of these scenarios in Jan and September 2007 and Jan 2001 is unemployment was on the way down and unemployment continued to go, or sorry, unemployment was on the way up and it continued to go up after the rate cut. In 2019, unemployment was on the way down and after the first rate cut, it continued to go down. So the nuance there is that because unemployment that we currently have is on the way up, even though it's slightly up, but it's still on the way up, off the first rate cut, historically, if unemployment is not trending down, which maybe tomorrow when we get the unemployment rate, maybe we're at 4.2 after the August job numbers. We'll see what happens, which would be down from 4.3. If we're not on a trajectory down, if we're continuing to stay up or flat, the first rate cut is technically not bullish until we get the unemployment rate to come down. And maybe it comes down in December, who knows? But that is what I think we have to look for. And I think 50 bips or 25 bips is ultimately going to be the defining factor on how the market decides to price it. So again, tomorrow I'll be live at 8:20. It's going to be one of the most important metrics that we have to see for the broader market. And it'll basically let us know, how good we are or how bad we are in the broader economy. Nvidia's at 109. Wow. Nvidia getting a little pump. 108.97. Not bad. Up 2.6. Again, that DOJ subpoena was fake. So if it was fake, maybe the market doesn't care too much. All right, guys, in 30 seconds, we have ISM data. So let me pull that up. We should be able to see ISM very soon. All right, here we go. Let's see. What time is it? 9:59. All right, 15 seconds. Let's pull it up right here. ISM is coming out. So we have ISM services business activity, ISM services employment, ISM services new orders, ISM services prices. This second number or the third number is the consensus. So you should only care about the third number. That's the consensus. Okay, so here we go. For ISM global composite PMI final, or sorry, no, we're at 10 a.m. Okay, only at 10 a.m. 10 a.m. These are the two numbers that we're looking at. Oh, sorry. The trading economics is 1 hour behind because they're central time. So that's why it's different. So here we go. ISM services PMI. The expectation was 51.1. That's what I highlighted right there. We came in at 51.5. That's a beat. That's good. ISM services business activity, that came in lower month over month at 53.3 versus 54.5. ISM services employment expectation was 50.5. We came in lower at 50.2. That makes a lot of sense because unemployment is starting to go up a little bit, so you would imagine that goes down. ISM services new orders, 51.9. We came in at 53. That's better than expected. ISM services prices was 56. We came in at 57.3. That's a beat. I think that's a little inflationary, if I'm not wrong. So that beat is not the best beat, but the beat that is good is the ISM services new orders, which is a beat at 53 versus 51.9. So those are the ISM numbers we got. Let's take a look at how the market cared about all this. Is the market going up? Are we up on this news? Yeah, the market likes it. The market likes it so far. S&P, yeah, wow. 553, huh? The market actually likes it. And Tesla's at 231. Look at that. That ISM data was actually decent. We had a couple of beats and a couple of misses. One of the beats wasn't a good beat because I'm pretty sure it's an inflationary beat if we beat on ISM services new orders, which just means we're paying more for some of the new goods that we, or the new services that we have. But it's not that big of a beat. Forecast was 52.2. We came in at 53. So, 0.8 is not that big of a deal. Wow. Tesla's actually running on this. Market liked it. Palantir's up. Palantir's green. Apple, 225. Apple's up 2%. Google's at 158. Where's Robinhood? Robinhood's green on this news, 1913. Nvidia's almost at 110 right now. All still above 50, which is good. Yeah, that's a fair point. That's a very fair point by Chris. All of them are above 50, below 50. Oh, yeah, I forgot to mention that. All of them are above 50. So even if they're misses from consensus, we're still above 50, which is good because contracting would be below 50, and that would mean it's more congruent with the bearish narrative around unemployment ticking up and the broader market taking a hit. And we're not seeing that, at least in the ISM data so far. Wow, the market actually likes this. It was so funny yesterday. The market, we had JOLTS data, which was bad. The JOLTS data was not good yesterday. No way you slice it. The JOLTS data was good. And the market, we saw that massive red candle on JOLTS. Like we saw the QQQ. We saw the Qs go to like 453-ish. And then within almost 2 minutes, it just reversed. And the market said they didn't care anymore. One thing about this market, dude, is it's resilient. And I think that's what's pissing off a lot of the bears. It's like they have all of these arguments for why the market should be falling. And some of them are not bad arguments. Like you got to give it to them. There's decent arguments around unemployment and PMI for manufacturing, all that stuff. The problem is, or at least my opinion for the problem is that earnings growth continues to supersede some of the macro issues. And so that's why the market's like, oh, we only fell by 818,000 jobs. We don't care because earnings growth is good. Oh, we only added 99,000 jobs in the month of August, private payrolls. We don't care because earnings growth is good. Palantir, $30.72. Until earnings growth, wow, Tesla might hit 232. Holy crap, look at Tesla. Until earnings growth suffers, I don't know if the bears have a great argument for a collapse. But then again, the bears might be just a little early and the bulls might be wrong because as unemployment comes down, earnings growth will eventually suffer. We just might not be seeing it in the data. And so tomorrow's going to give us some more insight on what that jobs data looks like. Tesla right here, trying to break 232. It touched it for a second. It gets rejected right at 232, but it's at 231.8 right now. Trying to continue to get some more momentum. Do we see Tesla bottom signal forming today? I would have thought we would see 160, 170 or more before lower. Wow, Tesla just busted to 232. I don't know if we see 160 or 170 unless 1010 is a horrible flop or unless we have a recession. Because the reason I say that is because we got that level almost on August 5th at 85 we touched on Tesla. And then since then, we haven't got it. So I think we need a real macro downturn to get back into the below 200s, just psychologically and from like an algorithmic perspective, which could happen, right? If we get into a recession, yeah, that's very possible. But for Tesla to fall independently to 160, I think 1010 has to be such a bad showing. Like it has to be such a horrible event that the market sells it off. And I don't think that's going to happen. I feel like 1010 is going to be a little bit better than what people think. Or at least what the bears think, Where's SoFi right now? SoFi is 763, QQQ at 463, Robinhood at 1920. Wow, the market really liked that data, dude. We're green. We are green. There's some individual stocks that are red, but for the most part, even Upstart's green. Upstart's up 3%. IWM, that should definitely be up a little bit. It's lagging, but still. Yeah, IWM's up about a third. Where's the Mag 7? Mag 7 is all green. Faraday Future somehow is up 3%. That's also part of our Mag 8. They were up 60% yesterday for some reason. Wow, 233. I mean, it hit 232.5. Tesla's trying to make like a real moment right now. It added $45 billion in market cap in the past 30 minutes. Tesla's really trying to make a noise, an argument right here. And trying to make some noise. Are we going to get 1030 sell-off? Every single day for the past 3 weeks, we've had a 1030 sell-off. So if we survive the 1030 sell-off, that would be really bullish. But that is definitely something we could probably expect. We'll have Will on, who's the owner of Granite Shares, the leverage fund ETF company. So he'll be on in about He'll be on in about 25 minutes at 10:30. So we'll be talking to him and see if the market falls at the same time. But we'll hear from him. Will Rind is his name. I just looked him up on Twitter. Will Rind. So he's the founder and CEO of Granite Shares. He's the guy who got a lot of these leverage ETFs to start getting popular. You know, and for oh wow, 233. Holy crap. 233. Holy crap. While I was looking up his name, we're at 233.4. Wow, 6.3%. What I was going to say is launching leverage ETFs, you couldn't pick a better time, because if you launched it a couple years ago in the bear market, I mean, they would have got obliterated. But he launched it in a bull market, or launched the most important ones in the bull market, and they've been doing very well. But if we head into a bear market, obviously those ETFs are under a lot more pressure. He'll be on in about 20 minutes, Brad. He'll be on in about 20 minutes. Wow, Tesla's really just like ripping, bro. Ripping. 233.7. So that 230 resistance I said, that's gone. Those 20,000 shares were eaten up quickly. So now it's on to 235 to see if it can break that level. We got paper gains in the chat. Shout out to Jason. Jason's been bullish on Tesla. Looks like Tesla's running up a little bit more. Today, Mark says it was reported yesterday that Nancy Pelosi did not sell off her stock. Yes, Nancy did not sell off her stock. I'm sorry that rumor went viral on Twitter, but it went viral. Someone said Nancy sold, and it got like millions of views, and everyone started, thinking she sold. People are weird, dude. Like, you got to have a little bit of proof. Like, everyone just accepted she sold without looking at without like checking if like the form was out. So yeah, it went pretty viral, but she did not sell her Nvidia yet. We'll figure out if she does sell, we'll get a form, but so far we haven't got that form. Nvidia right here at 109. So Nvidia is still up 3% of the day. Google getting some love as well. Amazon up. Wow, Amazon's up 3%. Dude, what is going on? Why is the market selling off value? Verizon's down. I bet American Express is probably taking a little bit of a dump. Okay, American Express is up just a little bit. Berkshire Hathaway is taking a dump. Why are they selling off value that they bought up for the past couple of days? Yeah, Berkshire is down. Wow, 1.29%. Berkshire losing about 40 billion in market cap to buy the Mag 7 before this jobs report. It is so interesting. Coca-Cola is down. Visa should be up a little bit. Visa is down. It's interesting, dude. Market's kind of rotating back. United Healthcare theoretically should be down. Let's see if it's up. Nope. United Healthcare is down 1.2. There's a legit rotation so far until we get the 1030 sell-off from value back into growth. And they're picking the Mag 7 before the biggest jobs report of the year. It's so interesting. So interesting that's how that's happening. Okay, Ragman, I didn't want to say it, but you said it in the chat, so I'm going to quote what you were saying. Maybe, I didn't want to say it, but maybe this is the case. Maybe they have the numbers and they know the jobs data was really good and they're buying up tech. I mean, maybe. You never know, dude. You never freaking know. The fact that they sold off Nvidia on fake news, people always know something before something else happens. Interesting. All right, let's get an update from CNBC, see what else is going on in the broader market, and then we will we'll keep going from there, and we'll keep our eyes on Tesla and Nvidia.
Here are three big movers we're watching. Verizon buying Frontier Communications in a $20 billion deal, combining the top cell phone carrier by subscribers with one of the nation's biggest broadband providers to about 3 million locations in 25 states. Verizon gave up some early gains, Frontier down as the price was lower than its close. Tesla announcing plans to roll out its full self-driving assistance software in Europe and China next year, pending regulatory approval. More on what it means for the stock later this hour. And then Hewlett-Packard Enterprise in the red despite a top and bottom line beat. We're going to break down the numbers, talk about some of this margin scrutiny on the AI server business with the CEO, Antonio Neri, in just a moment this hour.
Got some eco data crossing, as Sarah said. ISM services for August, 51.5. We were looking for 51. Of course, anything above 50 does indicate expansion. Jobs, employment, 50.2 versus a prior 51.1. New orders, 53. Prices paid, 57.3. Market seems to appreciate the fact that we are still expanding on the services front.
I was going to say, market likes it. Good news is good news on the economy right now, because this market has been hypersensitive to any kind of growth scare data. And the data this morning is mixed. Good news on services just now, but a lot to chew on when it comes to jobs. Let's start with ADP. Private sector job read comes ahead of the big government report tomorrow. And it was weaker than expected. 99,000 jobs added during the month. Economists were looking for 145,000. Here's where the jobs were and weren't. Education, a big contributor, and so is construction. But actually, jobs were lost in manufacturing, in business services, in information technology. Also, if you break it down by small, medium, and large size firms, Carl, small firms actually lost jobs during the month, down 9,000. The gains came in medium sized firms. So just notable that where the strength is and where it isn't on job growth. Just some other data to pull out of the ADP on wages, because we've been watching that. The Fed's been watching that as it relates to inflation. So wage growth, they track wage growth for workers that change jobs, where you do usually see an increase. It was pretty much unchanged at sort of 7.3%, I should say. And that is the lowest pace since 2021. Now, it's still healthy growth for wages, but those numbers have come down. And then for people who stay at their jobs, wage gains of 4.8%, again, unchanged, but lowest since spring of 2021. What do we make from all that data? Well, it doesn't have a great correlation with the government jobs data, but it adds to more evidence that labor market is cooling. There's less demand for workers. And in some cases, industries are not adding jobs, and they're certainly not doing it with the wage growth that they did it in the last few years.
And then for the jobs that do exist, unit labor costs at 4/10, when you're looking for 8/10, the argument this morning is that is not indicative of any kind of second chapter of reflation or inflation rearing its ugly head.
Right. It hasn't been much to be concerned about on that front for the Federal Reserve. But if those that are worrying we're going into recession, things are collapsing. First of all, services should shut that down a little bit this morning, but also jobless claims. I mean, there's not a lot of stress when it comes to layoffs, because we got another read of weaker jobless claims, fewer Americans filing for unemployment claims. In fact, lowest since early July. We're at an 8-week low. It's the second lowest print of the summer.
This is a good point.
So if things were really starting to turn for the worse at big companies, you would see these numbers creeping up, and we haven't done that yet. So that's on the plus column. But then on the negative column, did you read the Beige Book yesterday?
Yes.
It's pretty bearish.
Of course, I can't read it now without thinking of you.
Right.
Flat to declining, right?
So what happened was, now you have 9 districts out of the 12 that saw flat or declining growth. And that was an increase from 5 districts the prior report. So that means only 3 districts actually saw growth during the quarter. And this is an anecdotal read. I really recommend it if you want to know what's going on in the economy. We know Fed Chair Powell pays attention to it. He cited it many times, and it was not great. And I just pulled out some random regional quotes for you to give you a sense of flavor. Here's from the Minneapolis district. A northern Wisconsin retailer said that tourist numbers seem strong, but they're spending money on need items, not want items. A Minnesota retailer reported that foot traffic is down and lots more lookers than buyers. Just thought that was good sort of color. And then in New York, I didn't do Broadway this time, but I did do visits to the Statue of Liberty, which is a proxy for international visitors. We're just about at pre-pandemic levels. However, a local tourism expert noted that international travel to NYC has been sluggish, even though they're still getting good room rates at hotels in New York City.
So again, her broader claim right there is that you do have some bad pieces of data from the Beige Book, which yesterday if you guys read some of the parts of the Beige Book, yeah, what the Fed put out showed some parts of weakness in different geographic parts of the states. Obviously, Bostic, he had his comments that came out yesterday as well. But that jobless claim number is one of the lowest numbers we've gotten. The problem is, and this is why I think the market can't fully start going to the moon, is because private payrolls came in at 99,000 versus 145,000 expected. And when you're adding 46,000 less jobs than what the market wanted you to add, you start to get into those questions of like, hey, is the labor market actually struggling in a more dramatic way than what we think? And so tomorrow is going to be the real big one to figure out how this plays out. ASTS, by the way, they just filed a shelf offering. Oh my God, they're down 18%. Wow. I saw this morning, but we didn't look at their stock till now. Makes sense that they're down 18%. The reason they're down, this is what happens if you bought ASTS at $36, $34 after it was up 2,000%. You got to just remember, this is the stuff that happens. I've made this mistake on other stocks as well. And that's why I didn't make this mistake this time on this fucking ASTS stock, because what happens when a stock's up 2,000%? You can't really blame them. They are going to dilute, and they didn't even announce the amount they're going to dilute. They didn't even say how much they're going to dilute. They just said, hey, we're going to dilute. You guys should know that we're going to dilute. And obviously the market sells it off because no one wants to get diluted, at least not in the short term. So this is what CleanSpark did. At least CleanSpark said the size that they were going to dilute, and the market, was upset about the size. It was a couple $100 million, but still ASTS, if you go up 3,000% in a month, the fiduciary duty you have as shareholders or as a company is to make sure that you raise more capital. This is exactly what GameStop did. GameStop raised like $3 billion when their stock went to like $45. And you can't blame them. If people are willing to buy those shares on the open market, then you kind of got to take advantage and sell those. So that's why that one is down 18%. Still a very promising future. A lot of deals in place and lots of momentum there. But at a $7 billion market cap, it's just one of those things to remember about in terms of valuation, given some dilutions happening. Robinhood now goes red. S&P slightly green on the day. Nvidia still green. We haven't had the 1030 sell-off yet. Max 7 is still pretty much green. Tesla still up 6%. It was up 7%. Now it's up 6%. Still, if we could close at 230, that would be super bullish for Tesla. I mean, super, super bullish for Tesla. Where's Celsius? Celsius is green. That makes sense. It was down 12% yesterday. Should have a little bit of a rebound. Zscaler having a rebound from yesterday. Ulta, a little bit of a rebound after their earnings. MongoDB, they had a great earnings. They're continuing to be up. Bank of America, even with Buffett selling as much as he's selling, people are still buying up. B of A, Bank of America, Microsoft at 410. IWM now goes red on the day. Broadcom is still slightly green. Where's IWM? Yeah, that's red right now. And Tesla continues to be green. All right, let's see some other headlines. Let me pull up some other headlines and see what else we got going on. We'll have Will on in about 12 minutes. We'll get to learn a little bit more about leverage ETFs. Let's see what other headlines do we have. Actually, before the headlines, wow, Tesla, hold on, 234. Tesla going right back up. Look at that. What word did I say? What word do I have to keep saying to get Tesla to go up? What do I have to keep saying? There's got to be some word. Guys, what word did I say that the market's excited about? That is, hold on. What is this news? What is this nonsense? Okay, so I have two pieces of nonsense. Number one, Gordon Johnson just reiterated his sell rating at $24.86 on Tesla. So there you go. Maybe that's why the stock's going up a little bit. I didn't say mayo. Okay. Didn't say mayo. Definitely didn't say tortoise. So Gordon Johnson just put out a sell rating. That's hilarious. And then this is the other piece of news that just hit my radar. OpenAI considers higher price subscriptions to its chatbot. OpenAI is considering a subscription price of $2,000 a month. They better be doing that for businesses and not consumers, because there is no way in hell I think any consumer is paying $2,000 a month. Like, I'm pretty sure that has to be for business users. There's no way that's for consumers. $2,000 a month is interesting. I mean, I would imagine a business can afford to pay that, but would they actually pay $2,000 a month for a chatbot? I mean, because that would be per seat. That would not be just for the business. That means if you have 50 people using it, that would be $100,000 a month, which is great for OpenAI. But who the hell's paying that? That is aggressive. That's reported by The Information. No other headlines that I'm looking at right now. Oh, one other piece of headline that, this morning: the US, the UK, and the EU are expected to sign an agreement on AI standards on Thursday, today. So maybe we'll get some more AI regulation news. Maybe that's why big tech's doing well. Or you're going to get some more regulatory frameworks around AI. Maybe that's kind of good for the markets. Again, regulations around AI only entrench the moats that big tech has. It stops competitors from doing as well. Bill Gurley gave a great talk about this a year ago on the Olin Summit. By the way, is anyone going to the Olin Summit? I know some people that are going. It starts in 2 days in Los Angeles. Let me know if you're going. The tickets are like $7,500, but I know a couple people that are actually going to it. If you are, definitely tweet us some pictures. But okay, so Tesla's still up at 233. We got AI regulations potentially happening a little bit later today. This was the headline on the Wall Street Journal. Trump is going to introduce a government efficiency commission recommended by Elon Musk, which basically I would imagine is an agency that tries to trim out a lot of the fat and regulations in the government that don't need to be there. That was a headline on the Wall Street Journal. I don't think that's helping Tesla, but I mean, maybe some people that like that think that's a good thing for Tesla. Maybe, I think, again, people just think Elon and Trump are getting close. If Trump wins, that's good for Elon. That's good for his businesses intertwined with Tesla. You know, that could be one argument you can make for why that's beneficial. 234 right now on Tesla. Speaking of SpaceX and Tesla and the government transitioning from legacy contractors, I want to play a clip of Palmer Luckey, who was on a podcast yesterday, CEO of Anduril, and he's talking about Boeing and why Starlink and SpaceX are getting more contracts, and this has to do with why Elon's getting more momentum as we see Tesla really ripping, dude. 234. I want to see if we survive 1030. We've got to survive 1030. So I don't want to get too excited until 1030. If we survive 1030, then maybe we're going to be okay. But here's Palmer Luckey talking about SpaceX and Elon, and then we'll get back to Tesla, and then we'll have Will on the show in about 8 minutes. Here we go.
This is the government is doing everything they can to not turn this into a monopoly. But of course, the real angle, I think, is actually pretty close to what you're talking about. It would be such a loss politically to send them home on not just a SpaceX built rocket, a non-union rocket. Like, remember when Biden invited all of the electric vehicle companies to the EV summit at the White House, and he brought Mary Barra on stage and he said, I just want to say to everyone that you have electrified the entire automotive industry.
You electrified the entire automobile industry. I'm serious. You led, and it matters.
In that year, GM had shipped 13 electric cars. I don't mean 13 models. I mean 13 cars. They had just launched their first electric vehicle in that year, the new Hummer EV. And like, to be clear, I like GM, and I like GM, and I really like GM Defense. Those are really great guys there, and I love that they have a defense division compared to most of the other car companies that have not built anything for the military specifically since World War II. But like, it was crazy to watch that nonsense, and we all know what the answer was. Union companies were allowed to come to the White House, and union companies were boosted as electrifying the automotive industry. Meanwhile, the guy who outsold every other company there by a factor of 10, even put together, was snubbed. And the rocket thing is just that on steroids. A non-union rocket bringing home our brave astronauts is not a politically viable event in an election season.
I mean, this is what happens when you buy Twitter, I think, is really what we're that's the sort of maybe giant, I would say, elephant, a bird in the room, but he got rid of the bird. I mean, that's what this is. This man took over the speech platform. He thus, to be maybe fair to them, Elon injected himself into politics in a way that probably no entrepreneur in my lifetime has done, and just totally politicized himself in a way that's going to come up every time we have to deal with SpaceX.
It is extraordinary. I never would have bet on that either. Like, it's not because it's brave, but also I'll just be candid. I think it's definitely negative for his businesses, which makes me feel like he must be doing it because he really does believe that it's good for humanity, keeps the window of civilization open. Like there's no rational business explanation for why he would do any of this.
Well, I mean, you could make a business argument. You could say that if America collapses, it's bad for business.
Yeah, the ultimate business argument: civilization must go on, or I can't make money. That's pretty good. But like a specific one, like I feel like even if someone hates Elon, they should be able to recognize he is not doing this because he's just like, bowing to pressure or doing what people want. Like, he is clearly doing what he thinks is right.
I would tend to agree with that. I mean, at the end of the day, there is not really a business use case for spending $44 billion on Twitter. Wow, Tesla, 7%. It might break 235. It really might break 235. And I think anyone, even if you don't like Elon, which is fair, you're entitled to your own opinion. Even if you hate Elon, you think he's a horrible person, you don't spend $44 billion and go into massive debt to buy a company to like pump Tesla. Like, because obviously that hasn't really helped in pumping Tesla. Tesla's not been the best stock over the past couple of years. There you go. Tesla up 7% on the day. So I think it really is about free speech. I think he really believes in it. I mean, it's too much craziness that he's dealing with in his business life to worry more about a social media company like Twitter. And so I think that's a fair argument. Now, the main point they were making there was that the fact that the government is choosing SpaceX over Boeing to bring back home the astronauts that are stuck in space goes to show you the technological prowess that SpaceX has over the lobbying prowess that Boeing has. Boeing has every single politician wrapped around their finger simply because, they fund a lot of their campaigns. The problem is the tech in Boeing got so bad, the quality control got so bad, the maintenance got so bad that these politicians couldn't justify. Tesla might be going to 235 right now. They couldn't justify allowing Boeing to bring astronauts home because the headline, if those astronauts died on the way home, would just be horrendous for NASA, for the market, for Boeing, for technology, etc. So it seems like the argument is SpaceX is winning simply because their tech is so much better. And my question becomes, what does that mean for SpaceX over the next decade? Because obviously, I think we would trust Elon and this team at SpaceX over the guys at Boeing to be able to innovate. And if they keep innovating, I mean, does Boeing, the billions and billions of dollars they get a year from the government, does that go to SpaceX? And if that does go to SpaceX, does SpaceX value at 200 billion? Does that go to 500 billion? Does that go to $1 trillion? You start asking yourself these questions, and then you start wondering, how does the Trump presidency also affect contracts going to SpaceX? So a lot of this stuff is nuanced here, but I do think that it ultimately will benefit Elon if he keeps on innovating. Here we go on Tesla, 234.8, man. It's up 7%, really not taking a break. It's doing pretty damn good. We've got 3 minutes until this 10:30 procedural sell-off begins. Let's see if we can avoid it today on Tesla. That would be really nice to avoid it and not have to deal with it. Is Rocket Lab up on some of the SpaceX news over the past couple of weeks? Rocket Lab down a little bit, 2%. Now, technically, Rocket Lab's up 30% over the past month, so Rocket Lab's done very well. But not really getting a bid from Tesla today. Is NEO up? NEO is up a little bit. BYD, I have to check BYD on Google Finance, see what they're doing. Tesla's still up. I think all of energy is getting a little bit of a bid right now. Yeah, BYD's up 1%. BYD. The ADRs on BYD are up 1% right now. Li Auto as well. Is that up a little bit? Li Auto's up 1% as well. Li Auto's up 1.34%. So all of Tesla, or all the EV companies, yeah, there you go. Li Auto up 0.91%. Getting a little bit of momentum from Tesla. Slight red candle right there. Slight little red candle right there at 234, but that's turning into a green candle as we speak. And we'll see if that can continue the momentum. I am just like, I cannot believe the market before one of the biggest jobs reports is selling off value and defensive names like UNH and Coca-Cola and going into Tesla. I mean, that's a hell of a thing for them to do the day before this jobs report. It leads me to think, dude, that the jobs data, some people know about it. Maybe they do. All right, 10:30. Here we go. Now we're gonna see if we can. If we can get through 10:30 to 10:45 ish, maybe we're gonna be in a better situation for Tesla. But the strength is incredible, dude. Every little red candle you see on the chart, it just breaks it as it continues going higher, and the red candle doesn't form into a little bit of a trend. It just gets eaten up as it keeps going higher. It's a trap. It might be a trap. It might be a trap. It might not, though. It might not, though. We haven't seen this type of momentum on Tesla in like really weeks, bro. You haven't seen this momentum in weeks. Austin says the reason he's buying Twitter is so that he can get Trump elected. Therefore, that can benefit Tesla. Yeah, you can make that argument, but I think the $44 billion is still a ton of money ultimately that he's paying at the end of the day. All right, folks, let's get someone on the show who is gracious enough to spend time out of his busy day to join us to talk about the world of leveraged ETFs. We got the CEO and founder of Granite Shares, Will Rind. Will, thanks for being here.
Hey, Helmut. Morning. How are you?
I am very well. How are you?
Yeah, good. Thanks. Can't complain.
All right. So, Will, you are the man. A lot of people don't know you, but a lot of people have engaged in some of the products that your company has launched, which is Granite Shares. First question for you, when did you launch this company, and kind of what was the motivation to get these leverage ETFs out there into the world?
Yeah, so we launched now 7 years ago, but we've been going for 6 because it takes a year to build the the asset management infrastructure, et cetera. So we're going 6 years, headquartered in New York City, and run a global business now. So we're operating principally in the US market, but in Europe as well, with distribution into Asia. In terms of the leveraged single stock idea, I think that was something that we had experienced before in previous companies doing leveraged products around commodities. and always felt like there was a natural extension to the category, which just no one had done before or thought of before. So we actually did it first in Europe back in 2019 or early 2020. And then there was a regulatory change here, which then allowed us to bring it here, which we've done over the last couple of years, and it's exploding in popularity.
So this started as an idea in the commodities market, and as regulations changed, you guys have the ability to do it on single stocks.
That's right. So in the commodities market, you could do leverage on a single underlying, so levered gold or oil. But we always thought it was bizarre that no one had ever done that on a stock, which is arguably the more intuitive, way to think about leverage and to use leverage. So we ended up sort of using that experience that we had in doing products on the commodity side to then build the bridge that eventually became the levered single stocks with Granite Shares.
What was the first leveraged single stock that actually took off for you guys and showed you that this is a real big market?
Tesla, for sure. So we had in Europe, it's a little bit different. We have 3X long and short products on the European side. So we had a 3X long and 3X short Tesla. And that obviously was I guess the lightning in a bottle, if you will, that gave us that moment that, okay, we got something here. This is going to be a good category.
Okay, so now I want to ask about the mechanics of a leverage ETF, because I am very ignorant to understanding how it actually works, and I'm sure a lot of people in the chat that are here don't fully understand it. From my understanding, if I buy a 2X leverage ETF, theoretically, if Tesla goes up 5%, the ETF goes up 10%. How does that happen? Are you guys buying more Tesla? Are there algorithms programmed into it? And then can you also speak to the dilution on the net asset value and how that erodes or appreciates over time based on the underlying asset's performance?
Yeah, sure. So there are sort of two aspects to that question. The first one is, how do we actually obtain the leverage? And that we obtain leverage via a derivative contract or derivative contracts known as swaps. And we get those from investment banks. And think of that as really just a fancy way of saying we're borrowing money to obtain that leveraged exposure. So in terms of if it's 2X Nvidia, et cetera, that's a derivative contract that we get from investment banks, typically large broker dealers, that enables us to take a 2X position or to finance those positions.
Right.
So that's like mechanically how we do it. And then in terms of how they operate and how the returns are generated, the objective is to provide, say, 2X on Nvidia, for example, long or short. So if Nvidia is up by 5% today, then our NVDL, which is 2X Nvidia, the idea is up by 10%. And the short, obviously the opposite way around. If Nvidia is down by 5%, the short NVD would be up by 10%.
Right.
And that's the case for the day. So there's a daily investment objective to meet 2X, minus 2X, minus 1X, whatever it may be. And then we rebalance the portfolio at the end of the day. And the reason to do that is because we want to maintain what's called a constant leverage. So in other words, it doesn't matter what day you buy the product, you're always going to be getting 2X leverage or minus 1, etc. So that's the way that we do it. Now, the net effect of that when you rebalance is that creates something called a path-dependent return, which means that it's different from a linear return. So if you started the week, maybe, and you had a traditional sort of margin position where you borrowed money against a particular stock and you held that for 5 days, and you compared the return with buying the levered ETF on Monday and then selling it on Friday,
right,
the returns would almost certainly be different because there's a compounding effect that is inherent when you rebalance on the leveraged ETFs that isn't with a traditional margin account. Right. Now, the flip side is you have margin, and that's a whole different subject where majority of people lose money in leverage because of margin and margin calls, which you don't get with levered ETFs. But ways maybe to summarize it and to think about it is people need to understand how these returns work, what is the compounding impact, and what this product likes is a trending market. So if you have a stock that's trending one particular way, over a few days, that is inherently going to be a bullish environment for the levered ETF, and you will most likely outperform the linear return on 2x the underlying stock, and then consequently, if it's down, you'll most likely underperform. So there's just the two sort of scenarios to understand.
So what is your response to people that think what you're doing or what companies like you are doing is creating too much volatility into the market, and it's creating too much of a chance for average investors to mess up because they think, oh, I'm bullish on Nvidia, so instead of getting 10%, I should go for NVDL and get 20%. Do you think there's an argument for why that's bad, or do you think people should just have the choice?
No, there's an argument for why it's bad, and we don't say for 1 second that this is a product for everybody. So it's like saying, okay, if you have a supercar, should everybody be driving a supercar? And the answer is no, that's inherently not. Or should everybody be riding a motorcycle? No. This for people that understand what the product is and how to use it and how to use it in the right way. So absolutely, this is for active investors or active traders. That's the target market for this kind of products. People that are comfortable taking risk and using leverage. So we think that, obviously there's a large pool of people out there that really enjoy this, but in a way, it's no different to people that use options, people that do, crypto, people that do, small cap stocks, etc. Everything is risky in its own way. It's just, how to do that in a responsible manner and do that to fulfill whatever investment or trading objective you have.
Yeah, I'm really happy you said particularly that this is mainly for traders at the end of the day, because I think of these leverage ETFs as trading instruments. In my opinion, this is not something I would want to buy and hold for a long time. If I'm bullish Tesla or Nvidia, I would want to hold them for a long time. Yeah, and you're agreeing right there as well. So I would imagine that if you are a trader that understands the options and volatility and potential margin requirements of dealing with these levered ETFs, then it makes sense. If you don't, then you stay away, just like you would stay away from allowing your brokerage to give you margin, which makes sense as well.
No, absolutely. And look, in terms of the volatility, yes, there's a lot of, from our perspective, there's a lot of money in these products. It's exciting that it's a new category, but it's really a drop in the bucket compared to the actual market cap of these underlying stocks.
Right.
And still very, very small. And I think about, the volatility universe is so much bigger than just a levered single stock ETF, because you've got the options market, you've got futures market, you've got all sorts of other derivatives, bespoke derivatives, listed derivatives. So the levered ETF market is really kind of small when you think about the grand scheme of things.
All right, so I want to get your perspective on NVDL. This thing has 4 to 5 billion under management. That's more than 95% of more ETFs of all ETFs on the planet. And you guys raised it in, I think, 18 months. Obviously, because Nvidia has done well, people got excited about it. Can you take me through like being in the office one day and being with your employees and co-founders and just being like, holy crap, there's like billions of dollars in this ETF?
Yeah, it sort of started by, one thing that these products get a lot of interest, maybe as it might be obvious to everybody watching this, is around earnings season. So earnings season, there's clearly a lot of chatter about, how the stock will perform or not perform, and therefore people try to position accordingly. And it sort of started to me around about this time last year when we had, Nvidia's earnings come out, and it was sort of the first time for me that there was like a huge amount of trading in the post market.
Yeah.
Nvidia earnings were released. There was a huge amount of trading, and it just like, when you look at the post market trade, just kept ticking. And it kind of really hit home to me then that, okay, this is something real. And it just sort of escalated from there. And obviously beginning of this year, I think people really sort of woke up to AI in a big way and wanted to find like who's the winner in AI. And therefore, Nvidia was the company. And for those looking for some extra juice, NVDL has become the largest single stock in the world.
Do you think do you think if we head into a recession or bear market, are you worried about the future of your company, or do you think the short ETFs that you guys offer will just outperform the long ones?
Well, levered single stocks is not all we do. So we have traditional ETFs, like for example, a gold ETF that just owns physical gold in a vault. That's BAR. So that's not leveraged or anything. It's just literally physical gold. And it's about $1 billion in size. So we've built the company whereby we offer a suite of products that are relevant for all market cycles. So that could be risk on, risk off. And like you said, even with the levered single stocks, that we have short products as well as long products. So if we went into a big recession or even a very relatively short-term recession, people can still take advantage of that by using a short product. So we do have products for everything, but yes, of course, like any asset manager, clearly the bulk of our assets are very much entwined with the market. So if the market goes down, we only get paid from management fees, and so we would suffer along with any investors that are owning the funds.
Got it. All right, last question for you, Will. Thank you for taking the time out of your busy day to talk to us about these leverage ETFs. My audience is fond of a particular company called Palantir, and you guys just put out an ETF called PTIR. Just any thoughts on why you started this one, and did you kind of gauge the fact that there are people that care about this company, therefore you wanted to introduce leverage to it?
Absolutely. So first of all, we have a little bit of a window into this because we've been doing this in Europe for a few years. So we have a bit of a window into what people like and what people don't like. So certainly stocks like Palantir have been successful for us. We've seen good traction with it. But I think it's really just part of the overall AI story. So as you know, with Nvidia, we've had huge success with that. We bought AMD alongside Nvidia again because that was sort of the second most wanted AI stock. And now, it's people coming to us saying, hey, Palantir we think is also potentially a winner here in the AI race, and we'd like to see 2x ETF on Palantir. So it's really kind of a combination of our instinct about first of all what we've seen be popular, what we know are existing trends, and then obviously what customers are asking us for.
I love it. Awesome stuff. Will's Twitter, putting in the chat. You guys can follow him there to get more information. Will, thank you for joining. I appreciate it. This was awesome.
Thank you so much.
Thank you, Will. Talk later.
Take care.
All right. There you go, folks. So that's a little bit more of the mechanics behind leverage ETFs. And I really agree with what he said at the end of the day. These are trading instruments. If you believe in them for a trade, then that's why you believe in them. I don't think it's, a company to go long on or an asset to go long on. And even Will, said it himself. It's like, hey, these are not things that you buy and hold. These are things that are for professional traders. So there you go. That's what we got with leverage ETFs. Did Tesla crack after 10:30? We are 15 minutes after 10:30. Still up 6%, folks. We're still up 6.22%, baby. Stock market news. Evan, thank you for being here as well. Thank you, Evan. Really, really appreciate you being here on the stream today. PTIR provides 2x returns of Palantir. Correct. PTIR provides 2x returns of Palantir. So Tesla here at 232. It's down from 235, but it's not collapsing all the way to 230. The ISM data was decent. The FSD news was very bullish. The Trump headline this morning, you could argue that is theoretically bullish, and the market's giving it momentum. Nvidia as well at 108, up 2.5%. Nvidia not slowing down. Palantir's up 0.5%. And then you've got the broader NASDAQ continuing to gain momentum as well. Yeah, up almost 1%. Dude, it's a green day. So far, it's a green day. It is a... It's a little bit of a green day, which is not too bad. Do leverage ETFs play dividends? Some of them do. Like BTIX pays a dividend. Some of them don't. So you have to look at kind of the filings between them, but some of them do and some of them don't. Okay, let's go back to CNBC, get some more updates on jobs and macro, and then we'll keep going from there and try to get some more headlines.
It's going to be a quarter point, and we think it's going to be 3 cuts. And the view I've held, at least, is that be careful what you wish for. More aggressive cuts certainly herald a bigger problem waiting. And so a scenario in which you see steady cuts, but smaller cuts, is far better for the economy and especially for the equity markets than big moves. And obviously, those moves are not independent. They are driven by what's happening in the labor market and hence what's the impact on the economy. So I think it's an interesting environment we're in right now.
How impressed have you been about equity's ability to outperform other macro tells like commodities and bonds? Is it about technology? And if so, is that at risk given some of the commentary lately?
So I think I'll answer it in 2 parts. First is, interestingly, equity markets have been more right than most other risk assets and the treasury market over the last, call it, year and a half, right? And so credit goes to the equity markets in that respect. The second part, is it all about technology? Yeah, a good part thus far has been all about technology, and especially big tech, which is a group of only 6 stocks, the way we define it. So yes, but I think since Q1 of this year, we have seen early green shoots of some incremental improvement outside of big tech, which is a very healthy sign. But I think where the caution comes in is that the pace of improvement people have been expecting is, I think, a lot more than what is actually being delivered. So I think it's going to be a very steady and slow process. It'll probably go more into 25 than this year. But overall, listen, if you look at the earnings season, for example, at the top of it, a lot of healthy signs, the best earnings growth you've seen in 2 years, positive operating leverage in which sales growth is less than earnings growth. So that's a very healthy sign. But there are red flags, right? So the numbers for 3Q have been cut quite sharply. And yet the numbers for subsequent quarters have been untouched, which tells me that there's clearly a fair amount of macro uncertainty. The other way to think about macro uncertainty is if you look at what the derivatives market is telling you, look at the forward S&P wall curve over the next month, NFP is the biggest event. And the move related to that in S&P is more than what has been realized in the last, call it, 2 odd years. So I think labor market and hence its implication on growth remains a critical element right now in the markets.
What about tech? I mentioned NASDAQ being higher today for the first time in a while. It's still down almost 3% for the week. It really has set the tone for stocks lately, also as obviously the biggest sector and the swing factor for the S&P 500. Yeah. Is the valuation reset? Do you think it's been done? Do you think we've washed out positionings, or do you see more of the pain for the group?
I would say that valuations have corrected quite healthily, but I don't think we're out of the woods. So if you were to think about the sheer scale of it, big tech, which has been driving almost 25% of the earnings growth in S&P, their valuations had peaked at 34 times forward earnings. And then during the correction we saw in July, August, they dipped to about 27 times. The bottom has been 25 times in the 22 sell-off, right?
That's when the NASDAQ was at 420.
So I think right now we're sitting at roughly 29 times. I am a little concerned because I think tech, what has happened is the torrid pace of earnings growth for big tech is clearly moderating, right? It's moderating at a healthy clip. So we saw 2 quarters of moderation. It's expected to have another level of moderation and then settle in around the 20% level. If that is indeed what plays out, and we are quite hopeful about that, then paying a multiple in the mid to high 20s is quite reasonable. But there is some risk to that. And so I think the minute big tech as a group, when it goes above 30 as a group, I think there is some reason for you to be more cautious about what you can expect.
So I think that's fair. I mean, we saw Max 7 get corrected pretty aggressively in August after the yen carry trade. Went from 35 times to about 29 times now at that average, which again, and we saw the growth of the Max 7 in terms of earnings growth go to the lowest level it's going to be in 3Q 2024 since 2Q of 2023. So it's the lowest it's been in 5 quarters, which is reasonable. They're not going to keep growing at the levels they were before. Obviously, Nvidia with the lowest beat they've had in a while, but that means valuations get more reasonable. And that means that, you're not having to buy Microsoft at 470. You can buy Microsoft maybe at 410 or even at 405. Nvidia right here falling a little bit, QQQ falling. So we got the 1030 sell off. It's just happening at 1050. Tesla's holding up still pretty strong at 231. But it is getting that red candle right there. S&P now I think is red. S&P just went red, slightly red. There's the sell-off. We went from 553 to 550. It's almost like clockwork going down. Martin has this headline: OPEC members delay plans to hike production by 2 months after the oil price slump. That should have oil prices up right now. Yep, oil is up 2%. Makes sense that OPEC is going to wait a little bit before they hike production. They want to get oil prices up a little bit, which is fair. So yes, it is the 1050 sell-off. That's what we're having right now. Is big tech Max 7 plus Broadcom or old tech companies? I would call it, I would call Broadcom in there. You could put it in the Mag 8. Broadcom is, their market cap is 750 billion, I think. 718. So Tesla's worth more than them today because Tesla's up 5%, but if not, Tesla would be lower than them. So yeah, you could put Broadcom in there. Broadcom doesn't get as much coverage as the other guys, but Broadcom probably is, one of the 8 biggest tech companies on the planet. I think it's in the top 10 biggest companies by market cap on the planet, along with Eli Lilly. That's up there, but that's more pharmaceutical. They've got the Nvidia of drugs with Ozempic. Eli Lilly down about 3.45% on the day. I think his overall argument about paying the multiple you're paying for tech, the bears are saying tech is overvalued. They're saying Apple at 223 or Nvidia at 108 or Tesla at 230 makes no sense. The bulls are saying, look, you may be right about some of the macro things going on, but the growth that these companies keep putting up, I mean, and I think it's undeniable, some of that growth. The only ones you can have real issues with is Tesla, but that's just because Tesla's going through a slump in terms of the amount of vehicles they're being sold. But if the pivot is from vehicles to rides, then that's going to turn into a growth curve, and one could argue an S curve, hopefully in the next couple of years. Outside of that, the other companies are putting up amazing numbers. I mean, Apple, you could say they're definitely not putting up amazing numbers, but again, Apple, everyone's betting on that super upgrade cycle. And if we don't get it, then we don't get it. But if we do get that super upgrade cycle, then Apple's going to sell a lot of phones. And if they sell a lot of phones, then you're going to probably get a decent amount of momentum in that stock, even if you are paying, 34 times for earnings. So I guess we'll see, but still the market is choosing big tech over value today. Berkshire, I believe, is still red, and it's very interesting kind of how the market is doing that rotation right before we get into that jobs report. Yeah, Berkshire now down 2%. 2% as Tesla goes up 6%. You could easily argue Broadcom is more relevant than AMD as a second place Nvidia. 100% agree with that. 1000% agreed. Yeah, I think there's a lot of ways to argue Broadcom's. The thing about AMD, dude, is like it's at a $200 billion market cap, which is not horrible, but their growth, last quarter's growth was good, but their growth is just not exciting for the majority of people. It's definitely not near, the 100% that Nvidia puts up. So, it's one of those things you gotta take with a grain of salt in terms of where their overall potential is. But I think that the PC upgrade cycle is what most people are looking for AMD, and that just might take a little bit of time before we get there. Okay, I think let's listen to this, and I think that'll be ending us out. Where's Hims? Hims is at 14. TJ and I still have those puts on Hims at $14. Our adjusted cost basis is $13.50 if we get assigned. So Hims is down 2% on the day, 3%. Those expire on the 30th or the 27th of September. So we'll see if we have to pick up some Hims shares. Palantir just went red. Tesla's still green. It's still up 5.7. I mean, Tesla's not really letting go that much. Down from 235 to 232, but not getting hit as badly. S&P is barely red. And then Nvidia is still up almost 1.72%. Okay, so let's talk about, or let's kind of end it on some more stuff around capital gains. So last night, Kamala Harris came out with a proposal saying she's walking back the capital gains unrealized. Well, she didn't officially say it yet, but the rumors are that people inside the administration are saying, hey, we need to walk back this unrealized capital gains tax, and we need to lower the capital gains from like 44 to 28. So here's an update on that. We've been talking about that all week. It does seem like they pulled it. The polls obviously came back negative, and it looks like they're going to be going with a different tax proposal than what they were going with over the past couple of weeks. Let's get an update from that, and then we'll keep going from there.
Harris breaking with President Biden and her new tax proposal suggesting a capital gains hike that would be far less than Biden had proposed. Robert Frank's at the table this morning. He joins us with the latest. Robert.
Good morning, Andrew. Lots of twists and turns and taxes on the campaign trail. Vice President Harris calling for a 33% tax on long-term gains. That would be higher than the current rate of 23.8%, but it is lower than the 44.6% rate that was proposed by Biden and that she endorsed before the convention. Now, under her plan, long-term gains would be taxed at 28%. She would then raise the net investment income tax to 5% from the current 3.8%. That would create that combined total rate of 33% on long-term capital gains. Now, it would apply to those with income, including a capital gain of more than $1 million in 1 year. It would be the highest rate since 1978. Now, in New York, the combined state, city, and federal tax would be 48%. In California, just over 47%. Now, she has not announced any changes to her plan to tax unrealized capital gains. Gotten a lot of discussion at this table. for those worth more than $100 million. Wealthy donors have been pressuring her campaign to lower the capital gains tax and reject that tax on unrealized gains. All of them were part of that 2024 White House budget, which she endorsed. Now, for a lot more on what the wealthy are being taxed and where they're spending and where they're investing, you can go to CNBC/Inside Wealth. CNBC, we have that full screen. Maybe not. We'll show it later.
What percentage of Americans do you think will be impacted by this? Because only 1% of Americans at the moment even pay the highest tax rate at 37%.
Right. So, and 0.1% of Americans get about half of the total capital gains. So capital gains as a whole is very skewed toward the very top. Now, in terms of how many make in any 1 year income more than $1 million, including capital gains, it's probably a very small amount. But you are reducing the revenue you're getting. When she went from 44.6 to 33, we'll have to see how it scores. But she had a lot of spending proposals in that budget that she has endorsed. And since then, she's added more tax cuts, including on small businesses, including tax exempting tip wages. But I think Becky's point was very important this morning when she said it was as much about the messaging as it was the numbers. The first time I've heard her say, we want to tax capital gains to reward innovators, founders, and small businesses.
I wasn't sure she believed that. I'm still not sure, because she was also using the number 28%. She said specifically in that speech, if you make over $1 million, you're not going to pay more than 28%. As you point out, it is 33%. It's the highest that we've ever seen.
Right. And it was a little unclear going into that speech and even out of it whether that 3.8 to 5%, whether it was going to be, and I've seen conflicting reporting on that. So
where it ends up being 33%,
right,
or it ends up being 28%,
28, or maybe 31.8,
31 because there's already
31.8 because they keep the 3. But it was clearly her donors. I've heard, I know, Andrew, you've been talking to a lot of the tech titans, a lot of pushback from donors saying, look, we want to support you as a moderate, as a pro-business person. So you get this unrealized gains and a capital gains rate of 44.6, but you got to come down on that. I think she's listening to them. Getting a lot of pushback from the progressives of the party, however.
Now, one other.
So there you go. Money talks. I mean, if you start losing funding, you start losing the modern left, which we saw Ro Khanna yesterday, right? This is the guy who is a Democrat in Silicon Valley who obviously supports Kamala. He even said on CNBC, look, I can't, most of my constituents are entrepreneurs, tech founders. There's no way we can tax the crap out of them and expect them to continue innovating, right? So Nvidia right here, or Tesla right here, still at 5.54%. It will be interesting to see what's the final policy proposal, because we still don't have any final proposals. I think before September 10th, that'll be the debate. And we'll see how that debate goes. I think that debate's going to be very pivotal to the public conscious in America in terms of who, the independents finally choose to go. And the polls after that debate is going to give us some more clarity on who wins or loses. But some of these policies, again, are just not as exciting to the business people of the United States. All right, I said I was going to end on capital gains, but actually we got to end on our guy, Dan the Man, because he was on Bloomberg. Let's see what he has to say. We probably already know what he's going to say. We're going to get some analogies and 9 p.m. parties or whatever, but let's see what he has to say, and then we'll end it off for today.
Senior equity analyst over at Wedbush Securities. Dan, you're on a tour. You're in Asia at the moment. We know that. We'll come to that in a moment. Stock down 9.5% yesterday, lighter on its feet this morning. $278 billion of a wipeout. Why? What was the trigger? Or was it just some kind of an August redux?
Yeah, look, I think there's just fears in terms of growth, not just from Nvidia, but I think across semis. And that's why you just saw a disaster day, for just the whole semi food chain. But I just look at it, has anything changed? And look, that's why we're in Asia the next few weeks. Nothing's changed from a demand perspective. Demand continues to way outstrip supply. And then you look at earnings, I think it was sort of a muted reaction. But I think we take a step back, and this is a story where the demand continues to ramp up from an AI perspective. Blackout delays, put to rest. I think these sell-offs, in my opinion, are buying opportunities, not the time to panic.
I just wonder, Dan, if an antitrust probe, if that escalating from the DOJ, this subpoena, if it hits your registry of concern at all for Nvidia?
Yeah, look, I think you have to put in the context of broader tech. I mean, Apple, of course, Google, you know, have another trial next week. I mean, that is just sort of the tone in the Beltway. I mean, we are just going to see some of those drum rolls. Look, we're not too concerned about this for Nvidia. I think just because when you actually look at what's happened here from an execution, the reason that they've essentially dominated it is just because how stellar the execution has been and how they've just been so far ahead. AMD and others will ultimately get into this sort of race. But I just view this as more of a scarier headline than the reality. And also in the context of what's happened in big tech, NVIDIA is just part of the club that continues to be part of that pressure, Beltway versus big tech.
Part of the accusation is that it's harder for suppliers to switch. It penalizes buyers. What is the worst case scenario here? Is it a chip, a mini chip or fissure in the moat, the grand moat around NVIDIA?
Look, the moat is what Jensen and NVIDIA have created, right? I mean, and that's not going to change. And I can almost take the other side. Okay, DOJ is looking into this. You know, rather look into this, give some sort of all clear, so it's not a concern. I mean, look what we've dealt with the likes of Apple, Google, Amazon, some others for a number of years. But I don't think it changes that. And I think the reality is they are the only game in town. And nothing's changing that. From an innovation perspective, when you talk about $1 trillion of AI CapEx over the coming years, where NVIDIA is going to get a significant piece of that.
In just this political climate, though, Dan, where you have two candidates and their vice presidents who almost feel like it's a competition of who can have the most populist policies. And then you look at something like Google getting slapped for antitrust violations, too. Is this a political climate that maybe you need to take a second look at some of these big tech names that we thought were safe from antitrust regulation and scrutiny, and maybe this time is different?
Yeah, look, I think it is a little different. I mean, look, Apple, we'll see that over the next, call it 12 to 18 months. But I think after that Google win from the DOJ, I think the climate does change a bit. But I think the reality, look, we've talked about it on the show, strong have gotten stronger. I mean, you talk with your previous guys about Mag 7 and big tech. That's not going to change. In other words, big tech are going to get stronger. And I'd argue with AI revolution, that's actually accelerates. And we'll see next week, when Apple launches iPhone 16. So to me, it is changing of the climate, but I think it just speaks to just tech is just going to become a bigger and bigger piece. And big tech, even through M&A, I think that's going to be the biggest variable. FTC Con, where that all goes, depending on political climate. I think it's all added to some of the agita as once September hits, going into the elections. I think that's also some of the sell-off that we've seen, just some of the nervousness going into the fall.
Well, Dan, you're in Asia at the moment. Part of that trip will involve, I presume, seeing people that feed into this supply chain. Two things I want to know about is how do they see demand holding up? You got the iPhone launch coming up. And secondly, how much conversation are they having around the political change here, the risk of new tariffs towards Asia?
Yeah, great questions. I mean, look, one, the reason, there's a second trip to Asia in the last month, got to see where demand is, right? I mean, you're not going to find it in the spreadsheets or 10th floor of a New York City office building. But from an iPhone perspective, I mean, units, iPhone 16 originally started 84 million. It's above 90 million. And that's bullish in terms of what we believe supply chain's indicating in terms of what will be an AI-driven super cycle with iPhone 16. And I still believe an underestimated demand cycle that's going to play out for Apple. But then, you talk about just broader demand. Demand continues to tick up, not tick down. And I think the tariffs and some of the U.S.-China cold tech war, that is a worry. And I think that's the probably biggest question from investors that we meet in terms of going to November. What does each candidate mean in terms of, the quote-unquote AI trade in terms of Trump or Harris?
All right, that's what we got with Dan Ives, folks. Kind of the same stuff we've heard around Nvidia, Apple, and what demand looks like. One final thing I want to show. So I just got this picture right here. This is an example of what we were talking about in the chat, the Granite Shares 3x long MicroStrategy daily exchange traded product versus MicroStrategy. you can see the difference in terms of the asset class performance. And obviously that's because the nature of the net asset value, the nature of the dilution, the nature of the daily buying and selling, and then the nature of when it goes up and when it goes down and how the ETP or ETF would react to that, that obviously can have a massive impact in terms of returns when it comes to a leveraged ETF. So again, one of those things to always care about if the leverage ETFs are something to look at. Tesla's still green, up 5%. We do have the red candle. We got the 1105 sell-off, 1050 sell-off. Palantir goes a little bit green. Nvidia goes green. So sell-off hasn't taken these stocks red outside of the S&P, which is barely red, but it has taken a little bit of momentum off from the green. If we end at these levels for today, I think that would be a hell of a day going into tomorrow, which is that jobs report. Again, I'll be live at 8:20 tomorrow to see how that plays out. But all of Mag 7 still green. Berkshire's red. So clear rotation from value to growth, or at least value to safe growth in the Mag 7 today. And I guess we'll see if that holds up for the rest of the day as well. All right, there we go. And Broadcom today as well. Yeah, so tonight I'll be live. Jason will be with me at about 4:15-ish, and we'll do Technical Thursday. So we'll have a ton of different stocks to go through on the technicals. Obviously, we'll look at Tesla and see what levels he's looking at to hold or to not hold. Celsius, that's a big one. Nvidia, obviously, Palantir, all those stocks, Robinhood, S&P, IWM. But then after that, or before that, we've got Broadcom. So we'll do some technicals on Broadcom once we get Broadcom earnings. And if those earnings are good, hopefully that'll give us a good understanding as well. All right, that is it. Word of the day. Today is a word that I've never heard of before. I don't know if you guys have heard this word. Forsooth.
Forsooth.
It means truth, essentially, or indeed. So the way you use it is a modern day example. This was a word apparently that was used in like Middle English literature. A modern day example is, forsooth, I should be so lucky to find a parking spot on a Friday night. Dude, I have never said this word. There's no way anyone in the chat knows this word. Forsooth, I should be so lucky to find a parking spot. Forsooth, there was always a 10:30 sell-off. So indeed, there was a little bit of a 10:45 sell-off, but still holding up strong. Still holding up strong and not being too bad. Oh, Psych Pilot, I'm just seeing this right now. Thank you for the 5 memberships, dude. Really, really appreciate that. This notification just popped up on the starred part of my screen. So thank you for the 5 gifted memberships. I thought that you could get a gifted membership just by clicking on someone's comment and claiming it, but apparently you guys told me that YouTube automatically gives memberships to people that are like active in the chat. I didn't know that was a thing, but apparently that's a thing. So thank you for that, Psych Pilot. Really, really appreciate that. For those that don't know Psych Pilot, he was on Palantir Weekly a couple weeks ago, and he got to, I think if I'm not wrong, he has 10,000 shares at like $12, $13. So he's holding on to those bad boys and riding out this Palantir story for the long run. So appreciate you, bro. Thank you for that. Tesla ends green, or at least as the market open closes, we got green on Tesla at 5%. Nvidia's green. Amazon green's by 2%. Google's green. Meta's green. Microsoft's green. Apple is green on the day. IWM a little red by about 39 bips based on the broader market being green. S&P down about 0.11%. QQQ up 0.5 or 0.15 because the broader tech sector is green. Robinhood right here at 1909. Bitcoin is down 56,000. Palantir is green on the day or just slightly red at 30.53. And then S&P at 550.4 on the day. All right, that's it. Thank you, everybody. Appreciate it. We'll be back at 3:45 p.m. for the market close and for Broadcom earnings, and we'll keep going from there. Thank you, everybody. Have a good Thursday. Also, we get money market fund data at 4 p.m. So money market funds, we'll get an update on that and see what's increasing or decreasing in the money market funds. All right, bye, everyone. Have a good one. I'll see you guys in a few hours. Bye.